This is London with Bitcoin Spike and VIP Trader. We're going to talk about the New York Open. We will be going through several guys, from equities to cryptos, etc. We hope that you're doing very well. Let me make sure, there we go, that the specific CNBC volume is down. Now we're going to be opening. We had a hot jobs report, hotter than expected. So we're going to be looking at Tesla. We'll look at NVDA. Remember, this is London, former hedge fund owner, private, non-SEC, not financial advice. Duke University, Harvard Business School. The key focal here is we'll be looking at equities, not financial advice. You're operating at a delay, okay? Just the fact that this is being streamed, you are operating at a delay. Do not take live trades off of a delayed stream. That's the best advice that I can give you, and in the only context it'll be that, guys. We'll look at the equities for simple purposes of applying the patterning and applying the trade tactics to our specific Bitcoin trades. If you trade, and let us know how it goes. Shout out to our VIP #1 trade group. We're looking at a drop on the open. In terms of the volatility capturable, we guys were attracted to the open for purposes of essentially the volatility that is in play. We like to hit the volatility quickly. Taking a look at the specifics on the open, the drop on Tesla is noted down into the specific preceding level of resistance that was noted yesterday, okay? I noted that on the close yesterday that this specific level could like to get retouched. We have opened below this level. Let's look for the levels of engagement where we specifically are right now. Across time frame, we're just underneath the specific hourly 20 moving average on Tesla. This is a tight spot for the bulls to just say, let's go ahead and get bullish and schedule into a specific hit. That preceding level of resistance, it's really a no man's land kind of open, just so that you know, it's really a no man's land kind of open. The specific level of engagement, the cap line on the daily, period. On Tesla, cap line on the daily. Looking at the specifics on NVIDIA, we're seeing a cap line on the hourly get reinforced. Our cap line is that specific. Also 4 hourly engaged directly on the 4 hourly on NVIDIA cap line. Meaning, what's the cap line? The capital control line, which is what? Which is, as a matter of fact, RSI stochastic and MACD, kernel function thereof. Let's take a look at some of the different time frames. Looking at Bitcoin, we got a nice performance early on down into a specified level again, both in terms of our lower pro line on the 8 hourly, nicely done exactly on that 8 hourly, and looking at the pickup on your 4 hourly, that would be a hit to the lower band, completion of that 20 moving average cross under to the bottom side band on Bitcoin traded perfectly. That's nice to see with a pickup, including on our specific 8 hourly lower pro. Remind again, take a look at that 8 hourly time frame. We do like that as a time frame. You'll see the precise laser guided entry on that 8 hourly lower pro line, and just a recoup, just a nice recoup. Bit of a frustration last 24 hours or so. Level of support, level of resistance. Your 4 hourly has been expressive of some real positive dynamics in terms of momentum, as has your hourly. So looking for downside targets has been difficult. The relief that we got for the bears to the downside of this 4 hourly target, bears have been parked in a short this entire time. Mind you, even up through getting washed out, stopped out, this has been a level of consideration, this lower band on the 4 hourly. So it's nice to see it pay ultimately to satisfy that interest of hitting that lower band. But mind you, it was an elevated level or elevated target after that original cross under the 20 moving average. So we note such. We definitely note such. Looking at that 4 hourly, looks like that 20 moving average is in play again. Let's dig back into Tesla and assess where we are at on the. Let's look at that daily. Okay, the daily cap line has traded, is the level of engagement currently on the price action. Overall, let me take a look at the NASDAQ and see where we're at. NASDAQ off 0.44 in a bit of a precarious situation. The NASDAQ, let's take a look in NDX. In terms of the potential for a breakdown, we would appreciate the opportunity to participate in any breakdown. We're value-driven traders. The bottom line, we like deep digs. A level of support really a difficult pattern to look at. Any time frame from the 4-hour, 6-hour, if you're looking up through the daily, etc. You're just looking at some a difficult grind along, and a difficult to identify on the NASDAQ here. Is it a bit of a we would just say it's a defective. We would most likely categorize this as a diamond bottom formation. It's just defective. We discussed that yesterday in the stream. Take a look at the lack of conformance here from the lower end. That heartbeat function that we need from the downside to the upside just isn't expressed well enough on that top side. So it's an uncomfortable grind on the NASDAQ along this level of support as bulls are trying to hold the tech sector together as we look at the names such as Tesla and look at the likes of NVDA to really reinforce some positive trade opportunities in the market. So in terms of this specific level, okay, active traders on that daily, our active traders did engage on that daily specific capital control line. We do have a gap up above now. It's nice to have a gap to work with in terms of satisfaction thereof. Just the jobs reports was a little bit too hot to handle in terms of good news winding up being bad news. Now, the good news is this. Yesterday we spoke about the specific literal, guys, this literal was pointed out in terms of the flat top prior resistance and the notion that it could likely attract some attention, some gravity to this flat top resistance on Tesla on the 3-minute time frame. So we specifically discussed this as a warning, okay, in terms of just a level to be prepared for, so that we're sitting right on that level. It's not a big surprise for us. I think you'll agree we did discuss that directly. So to the extent that we have capitulated, let's take a look also at NVIDIA. What did we discuss on NVIDIA in terms of, and mind yourselves that we had the specific, this was very important as you see the 5 minutes start to get active, an attempt to get active up and over. Really, what's the threshold resistance right now is that lower band. So you're seeing that lower band engage as a level of resistance on that 5-minute note such. A little bit of a tricky open as well as you see on NVIDIA a little bit more clearly, a nice level on that 4-hourly capital line pickup. 4-hourly, daily, weekly, we like those time frames. We will, guys, flirt with the hourly. Certainly, the lower time frames require some quick action. You know this. Now, on NVIDIA, taking a look at this preceding level of resistance in this zone, nearly a carbon copy story that we had with Tesla, revisiting a prior level of resistance, right? That's just typically what we see. Flat bottom resistance, or flat top resistance and flat bottom supports like to be revisited. That is the bottom line. And let's take a look at some of the other specifics that we noted here. The good thing is, we said yesterday, what was the strategy yesterday that I felt most comfortable with and that I reiterated to you was, well, let's trade this on breakout. Let's see if we get a nice level hit up and above in terms of the breakout on NVIDIA, that inverse head and shoulder. So that was the correct approach. Okay, I'm just going to reinforce that to make sure that we're listening and firing on all cylinders. We've got our hopes and dreams in the market. We'd love to just see it, bam, just encourage everybody. Let's go long, let's do it. But you guys know, it would have been a nice trade op to open up and out over this level to establish some targets to the upside on that breakout. Would have been very nice to see that. The fact that we are negotiating in some tumultuous waters underneath with multiple levels engaging to include just trying to push below that specific, just barely below the 20 moving average on the 30-minute. We're just going to note our ability to interact with the technicals on a basis that allows us to capture some trades. That's the bottom line. As we will assess that on the equities on a quicker deployment basis, I want you to assess your setup at home. I can only discuss what's on my screen. We've got 20 screens in the room that I'm in currently. 20 plus screens, 20 over 20 screens just in the room that I'm in. You're looking at one screen. You got it right. So you need some proficiency and some, I would just say that you need to really assess your own dynamics there within your trade station setup so that you can actively and efficiently operate in the market. Looking at the momentum, always bearish. This is on Tesla that we're currently looking at. Let's take a look at, hold on one second. If we were to look at the specific features of momentum, I decided to put this front and center on the specific charts after Tesla really started to play a little bit dirty, okay? It was a few weeks ago, and Tesla just got to the point it was really decided to play a little bit dirty on some of the patterning. I'm like, okay, fine. How are we going to reinforce this specific momentum issue to where it's just without question? What are we going to do? And I decided to put it just front and center so we can't miss it. Just bam, here we go. Bearish across the board from the 3-minute, 5-minute, 15-minute, hourly, and the 4-hourly to the extent that we're conformant or non-conformant. Let's take a look at the SOL really, and this is the monthly on the right-hand side. So that's a really drawn out time frame that may not have immediate results. Let's take a look at the specific 4-hourly bullish structure here in terms of nice roll to the upside, great moves to the upside. We saw that crossover, beautiful day the other day. Nice day. Good news is we have a gap. We've established a gap down today. And as we look at the specific guys, at the specific momentum that has generated a nice move, we really would have had to have seen a, similar to Tesla, a real stratospheric kind of rise and breakout. This level isn't done yet, but as we look at the 4-hourly in terms of this challenge to that upside resistance, we're just not done yet. It looks like we've got an incoming level for Tesla at the specific cap line. They're under at the specific 20 moving average. I want to encourage you to work with your precision and to engage as precisely as you can in the market. We have had this specific lower level potential pickup in the market for a while. So it's nice to see some expression to the downside. If you don't have specific, I'd say the specific labels here for your charts, of course you can still operate. This will be an indicator that at some point I'll want to deploy, but I'll get pre-access. Of course, probably let a VIP, we'll continue to test it out in the background, okay? So we'll just state that we'll continue to test it out in the background. As we would look at the weekly, the big kahuna trade here was right at the cap line. That short really did well. So we've been operating between the 20 moving average on that weekly, and that's just noteworthy, between the 20 and that upper cap line, RSI, stochastic, and MACD. It doesn't sound like fun, does it? The RSI, the stochastic, and the MACD. It sounds like a lot of work. It couldn't be easier with the actual line on the actual chart. So on the hourly, we're seeing that flip underneath the 20, which we opened below. The question is going to be, will that target reinforce to the downside as we look at the specific lower band on Tesla? Definitely worth considering and noting that downside target on Tesla. The hourly, given this open that we've had with 10 minutes into the equation, or into the New York Open. Hope you are all doing well. This is a kind of a good way to close out the week, huh? Let's get a little bit of extra volatility and some nice setups as we look here. Tesla, we discussed yesterday also the clear need to breach this level of resistance to the upside to create an additional handle here would be fine. We'd love to see that engage, okay, to establish a temperature and an additional handle in this zone would be fantastic. We'd be happy to trade such. Be aware of this level of incoming, level of support, where they're just orders stacked. It may look like a really aggressive move to the downside, but this is going to be on your 15-minute chart, just a level that we would expect to see at some point levels or trades engage along this level of support. Looks like about that fire sale line. Let's take a look here. There we go, boom. And that fire sale has already picked up on that 15-minute. If that's one of your time frames of choice, congratulations, you've hit into and done well on that specific level of support pickup. Now, in terms of your carry trades versus your flash trades, flash trade meaning any trade that lasts in between, guys, 10 seconds, 15 seconds, I'd say your minute, your 2-minute trades aren't going to be considered necessarily a flash trade. I just wouldn't consider it as such. The real quick-handed trades, we say the Jackie Chan hand, right? You need Jackie Chan hands for that move, right? Really quick hands in the market. Just work into a level of execution that's comfortable for you. It doesn't mean it's going to be slow-paced and everything's just going to slow down and become easy. It may be like driving a Formula One car. Right? If you like driving fast, you'll appreciate this. It may be like driving a Formula One car. You may be going 100 miles an hour, but you'll learn to capably handle the car at those speeds, right? And you don't want to go out with any level of guys with any concerns on your skill set if you're going out to drive a car around the track at 150 miles an hour, right? So just deploy that as you would see fit in terms of your own progression. Don't speed around the track. Don't deploy your skill set too aggressively, too early, and work into those fundamentals. Okay, that will carry you through to to you guys mastering the trade dynamics at the rate at which you want to deploy them. Okay, so looking at a little bit lower of a level resistance carried down to a support level here, we have a variability on the 15-minute. These are never per se comfortable. We expect variability with Tesla. We just do. We expect quite a bit of variability. Looking again, let's take a look at the specifics here in terms of the momentum. Again, it's just down on the, and if you were to look at this, what does the downward momentum mean? If we were to look at the specific 3-minute time frame, it's just been a drop, a consistent drop on the 3-minute time frame. As we've opened, it's continued to just slide. So that's why you see bearish here. That's a directional component of that said momentum gauge. We can start to look at some targets engaged from the top line, from this top line. Let's go ahead and assess this as if we were looking at a topping formation. Use our specific extensions. Let's look maximize from top to bottom. Bam. Let's see where we're at, right at that golden pocket right now with a downside target, the 248.67. All right, so we have that amplitude. In terms of the amplitude, and I'll leave it exactly as we drew it the first time. That was a good draw. Looking at the golden pocket pickup, right, that 61.8, the 78.6, the 86, and that full completion are to the downside. We did see a nice completion yesterday to a golden pocket, didn't we? I believe that was on NVDA or Tesla. We'll check which one that was, but it was a nice surpassing of the 50% right into that golden pocket. I think 50% is going to be your maximum probability. Really, the golden pocket is something that's always in play as well. You know that. It's not to be conditional. It's just to let you know that the 50% is your maximum completion, your maximum probability, with the understanding that we would, of course, always really prefer, depending upon the time factor required to engage upon said full completion, we would always, guys, what would we do? We would if we could request it, we would, but we would hope to get additional volatility in the form of a full completion for the amplitude of, say, a topping pattern or any pattern. We're after that. So when I speak conditionally about, well, we're at a 50% pickup, that's the max probability, right? When we say something like that, it's not me being tentative. It's not me being less aggressive in the market. I'm always game for a 100% move personally. I'd love to see the additional volatility. But when I'm compromised or the market compromises me in terms of probabilities, I note such. You can take the additional volatility if it comes with a decreased level of performance in the form of probabilities, yes, or secondarily, you can take the additional volatility and run with it if it's going to take additional time from me in the market. One of the two things. I don't want to sacrifice the probability of the play. I also don't want to sacrifice the amount of time, okay, that the volatility is going to express itself within. You could say, well, we would prefer the additional volatility, but if it took 2 days to make it from the 50% to the full completion rate here, that's not a good trade for me operationally in the market, okay? So, or just to bank on the full completion to the 100%, as you understand, if we were to say, well, you've got a 75, or let's say an 85% chance of hitting this 50% target to the downside, 85% chance of hitting the 50% to the downside. Well, let's say you've got a 57% chance of getting to the full completion. You can keep those odds, right? You can keep those odds. I want to play with that 85%. That's the key. That's the key focal that I'd like to play with in the market. So the probability and the time factor consideration, both issues that we want to put into play. That 4 hourly, we're just up off of that cap line. A lot of orders waiting in these zones on Tesla, without a doubt. So we've got a little bit of an idea of what's going on in this zone with a hit into the golden pocket. And I would want to differentiate, just so that you know, I would want to differentiate what I just drew on the candle wicks to align with a line chart function as well. I would want to draw into a line chart function to see how much more abbreviated or how much more conservative from the high to the low on the line chart. Okay, I'd want to quick draw this high to low on the line chart, and yes, make a determination as to where are we in terms of a full completion on the actual lines. There we go. So we're at the 78.6 on the actual lines as measured on the 5-minute versus, okay, and a lack of agreement, lack of between the time frames, we have a lack of confirmation. Okay, between the traders, a lack of agreement between the specific always on different time frames, as the traders on one time frame will assess the line chart differently due to the expressed volatility as a function of the composition of the specific line. Okay, the line's going to express more volatility on the lower time frames. Thus, it's going to generate differential. I'll say a differential set of targets from your typically your higher time frames, which are more condensed in terms of the expression of the lines. You'll see that just the engraving that occurs here, that additional volatility on 3 minute. Take a look at the 5 minute. We still have that. We have a nice etching going on. Taking a look at the hourly. Somewhat, but not so much. Some nice smooth lines begin to formulate on that hourly, wherein we see just that increased etching carving in on the lower time frames, right? So that's just consistent within the nature of the additional volatility being shown on those specific lower time frames. So we note that in terms of the designation of our targets. Looking at the chart here, let's bridge over into NVIDIA and take a look at NVIDIA. Bitcoin has settled down just a bit. We'll take a good look at Bitcoin before we dig into NVIDIA. Looking at a nice throwback feature. This has been a difficult pattern to really assess and identify here with the structure of a potential bear flag move to the downside on the specific hourly move to the downside, upward sloping channel with a differentiation or with a bit of a defective channel framework. But we do have the componentry here of a symmetrical triangulation. And I caution you, anytime you see a breakout to the downside, and I'll caution you in line with Bulkowski, breakout to the downside of a specific symmetrical triangulation. Typically, I invited you to read up on that. If you did, congratulations on Bulkowski. Typically, a symmetrical triangulation to the downside is an underperforming pattern for the bears. Typically, an underperforming pattern for the bears. You got it right. So looking at this, it's not a surprise to see a bit of a glitch in this area for the shorts on try one, on try two. Now we've got to the throwback. First of all, it was a busted pattern here. Breaking of this level of support, Bitcoin throwing back into the pattern for a bust, taking the shorts money. What was against the bears? The 4 hourly momentum actually seemed pretty determinative in this capacity here. We're going to note such to the extent that the 4 hourly can be relied upon. It likes to lag when it's in conformance. We'll pay attention to it, and we appreciate the fact that it's actually functioning as intended. You know this. The hourly also was a strong indication once we turned that corner. But we did have, we'll say this, we did have some confirmation on the hourly to the downside. So we had a divergence. Once again, we had a divergence. Price pulled the specific momentum indicator in line with price. So you have two options anytime you see a divergence. Two options. You have one, the option that the price will become conformant with, if we have downward momentum on the hourly, the option number one is that price becomes conformant with the downward momentum and we drop, right? If there is a divergence, right? Price heading to the upside, the momentum indicator heading to the downside, that's possibility number one. Okay, possibility number two is that, well, the indicator is going to adjust to the price. So instead of price becoming the factor to be adjusted and come in conformance and to eliminate the divergence, not the price action, but actually thereafter the indicator can swing around. So we're always paying attention to that essentially the componentry there, that it's not always the price that's going to adjust. Sometimes the stubbornness of the price and the market participants will pull that indicator back around to eliminate the divergence. Absolutely. So let's look in a bit of a, guys, it feels like a Friday open. We're down on some hot data, a double hot data jobs report. That's about where we're at. And that's verbatim off of CNBC. They called it a double hot jobs report. So we're down on great news for the economy. We're about to retest that 20 moving average on the specific hourly. Okay, we're retesting and just about to retest that 20 moving average on the hourly, and it just feels kind of like a Friday. Okay, they've shifted us off the highs. We've got a really hot print in terms of the jobs. Red hot, they said, red hot or double hot jobs report. And essentially, the information that's presented to us offers us, to the extent, a predictable level of correlation. If it's bad news, meaning good news in the market, that's fine for us as long as there's a little bit of consistency there and we can learn to operate within the moves. If we are going to predict or literally, we've had a few issues on CPI, et cetera, where I think the White House themselves had to address any front runners who may have had privy information or pre-release information on the CPI. You guys know we've traded that. We've traded through that and seen the market jolt to the upside or downside before the actual release. That's not ideal. You guys know those types of situations in the market can erode trust in the market. What we'll say is, as long as we can operate with some reasonable level of expectation in terms of the economic data that's being released, and as long as we can look at our technical indicators and continue engage in a rational trading tactic for profit, if we can enjoy the market, the operation of the market, we don't have to agree with every move, but we do want to be able to rationally, of course, guys, but it doesn't go without saying to rationally approach the market. It may seem irrational that we have the specific positive jobs data, and all of a sudden the equities are down. Well, the notion is, and you understand this, and I don't want to be the reinforcer of a lack of logic in the market whatsoever, but the notion is, well, the economy's hot. The Fed will have to cool it down further to stymie inflation. So to the extent that that is the predicate in play, understand the dynamics and the framework of what the specific economic data release could imply and why that would give more fuel to the Fed fire in terms of Powell and how that could dampen the open on a Friday. So we understand such, and it's nice to trade Bitcoin went through a nice drop on that. I think we'll all agree Bitcoin went on a great drop down to that specific 8-hourly lower pro line. Nice pickup, look at that. And now the specific 20 moving average being reinforced. We talked about this level yesterday, didn't we? The 8-hourly, that we're not real keen on this, not only for the ability to flip up and around and slide up and around, but just the fact that it takes long enough for us to actually get a specific additional candle close. So we're very much paying attention to the fact when we have an 8-hourly, we have to wait 8 hours on Bitcoin for an additional candle to close. But it's nice to see our fire nice and our cap line really be the guiding factors here on that lower pro pickup. That's a nice pickup. Now on the drop, we got that on the drop of the economic data release, and that's about a 1% move. Not bad if you pick that up. In terms of the drop on the market, it did create a potential expectation. And let's talk about this as we look at this a little bit of the winding logic, okay? The winding logic between Bitcoin and equities. And we pay attention quite a bit to these specific dynamics. We saw a good pickup on Bitcoin nearly immediately, didn't we? It was very close to being somewhat non-responsive to that economic data report, right? So as we saw that, let's say on NVDA and on Tesla's, we're seeing the drop, let's say on this 4-hourly, we're seeing this cap line trying to engage that RSI stochastic and MACD, the bulls trying to enforce this level. I'll just say we were kind of, guys, we were exposed this morning to quite a move on Bitcoin, which gave us the impression that the equity should just bounce right back. You know that. So when we see Bitcoin front run in terms of a recovery in the markets, and Bitcoin's up 0.17%. If we were to look at Bitcoin is green, okay, on the right-hand side of your screen, Bitcoin's green. So to the extent that Bitcoin here in green really front ran the drop, it was open during the economic data. That's one of the reasons we love to trade Bitcoin. Okay, it is open 24/7, 365 with consistent levels of liquidity. It may alter a bit, but when we see that drop, when we're able to schedule into a technical level rebound therein, just understand that the equities have opened now. We've had this experience on this trade, successful trade and successful pickup at this level, which was a prior pivot to the left on the hourly. You guys can check that out, and on the 15-minute, okay, on the hourly and 15-minute. Let's look at that real quickly on Bitcoin, because this is a classic move by Bitcoin. You understand, a classic move in terms of a preceding. Let's look at that hourly and just note that we came into contact with that preceding lateral level, bam, to the left. If you trade Bitcoin frequently, you got to know this is where the orders are parked. Literally just parked, okay? So any preceding demand structure to the left, preceding pivot, it's just a frequent level within which we see an operation of a dip buying opportunity. That's the hourly. You can go to the 15-minute as well. And so differentiated time frames, I think on some of the higher time frames, such as particularly the 6-hourly I noted today, not my favorite time frame at all, but noted a nice flat bottom that has recovered. But this pivot to the left again on the 15-minute, just be prepared. Any of these can operate. Any of these pivots can operate as a pickup level where orders are stacked. Orders, guys, you have to understand the traders have already picked up at this level, right? Picked up at a preceding level of resistance, boom, for profits. So to the extent that you see the same traders, okay, or new traders, want to schedule into the market and say, well, sure, I want to make 3% on this move over a day and 15 hours or so, or lesser time or more. But let's have another bite of the apple and see if we can schedule in a predetermined level of resistance, flip to support. Let's go ahead on in and see if it will hold again. So that is, if you are trading Bitcoin and not paying attention to those dynamics, those are some of the most important dynamics in the market to pay attention to in Bitcoin. Okay, a prior, we'll just call it a lateral pickup, further expressing itself or re-expressing itself in the form of a demand function. Easy stuff, guys. If you're trading Bitcoin and you're not paying attention to this dynamic in the market, you are missing out, and it's going to be more difficult for you. I'll just suggest that you look into the completion thereof of your trades in line with that dynamic, okay? Or just explore, do it for exploratory purposes, assess such, please back test it always. Looking at the preceding level of support, reinforce. This also means that Bitcoin formulates a lot of flat bottoms. We would prefer to see this pattern structure itself out quite well in terms of a well-formulated, because when we get it, say well-formulated versus the alternative, if we look at a descending triangulation, you got it, descending triangulation, where do we get interested in these? Bulls get interested underneath these quite a bit, not so much on breakout. That's a joke in VIP. Our biggest joke is, what do you want to do all day long? Well, let's just sit around and trade breakouts of descending triangles. That's literally our number one joke, okay? Sometimes they'll surprise you, but most of the time they're pretty consistent. So looking at the levels of interest below, and we will note the differentiated time frames. There's always an interest at the preceding level of support, at least to be assessed. There's always an interest, at least to be assessed. Okay, so please assess such. I'll encourage you to focus as well as you look at focusing on your market dynamics. Okay, it is not easy to juggle in the markets, your technicals with everything else that you have going on. The more that you can streamline the process, and I'm going to say this, be the example. Work on being the example in terms of your level of focus, your ability to focus, your ability to simplify things on your desk at your trading or control system. You work on being the example. You work on being inventive enough and guys, just streamline enough to where literally you could just explain this in 5 minutes to anybody, but try and eliminate the distractions. Let somebody else try and hunt down the news if it's too much for you. Let someone else handle whatever else you have going on right now in terms of multitasking. Try and keep it to a minimum, right? Try and keep it to an absolute minimum in terms of your residual distractions. Some of you naturally are better at multitasking. That's the number one problem for day traders. It just is. That's not spoken of frequently enough. Can you multitask? Both within the dynamic of trading and the technicals that you're balancing, the time frames you're considering, the multiplicity of oscillators. Can you multitask? Right? I'm surprised we don't see more women trading because apparently they are clearly better at multitasking. That's I think they've studied that. That's not me throwing kerosene onto the fire. Hopefully, I just think it's the fact, right? I just think it's an absolute fact. Something dealing with. Watch me get in trouble here, but it's not. If it's kerosene on the fire, that's fine. I'll go ahead and it's just a fact. I'm going to base that on my own personal experience. I'll conduct my own studies if need be. Don't throw me into the fire for that statement. I just feel like that, right? In terms of the specifics for the specific, look at this for the level of support, pick up on Tesla. Bring down, go ahead and draw this out on your daily level of resistance. And we identified this earlier on, a little bit of a differentiated level of support with this bottom line hook here. Pay attention to this protrusion on the bottom line. Pay attention to this. Okay, you'll often see this protrude a bit further as you carry down a level of resistance to a level of support. You will frequently see, pay attention, you'll frequently see on this pull down the opportunity to establish a few hits herein and to have a bit of a protrusion along the bottom. Please pay attention to that. As you're drawing out your technicals, pay attention. Got it? All right, you'll see a protrusion down here and below, and it'll like to kind of nest up in here with a few of these other additional spots. If you see that in play, be prepared for a primary level of support to engage, which has engaged, and a secondary level, which can engage at that lower level of inclusion. Okay, it's the bulls to take the higher level if they want it. It's the bulls to take the higher level if they want it. Now, let's take a look at the dynamics in play if we are trading NVIDIA. Now, NVIDIA, crawling along the specific green buy line in the 5-minute time frame. And is there a cut loose in play? Looking at that 20 moving average on the hourly. That is the level to be reinforced right now with the bulls, or by the bulls on NVIDIA. Taking a look at 4 hourly, still gripping along this cap line feature. It's literally just baiting. You guys know, it just feels like they're just baiting the market participants. Where are we going? On the 4 hourly cap line, on NVIDIA, on the specific, are you going to hold, is the question. Are you going to hold the specific 20 moving average on the hourly? Those are your questions of what is the consequence, what is at stake here. You got it, a breakout up and over. If we can see a rebound, you want to talk about a heck of a day. If we can see, and to the extent we can get a rebound trade, the best of the best today for me is getting this curvature and handle on the hourly time frame. Big time would be a beautiful, beautiful trade. We're going to go ahead and just set an alert so I can get notified if and when that does decide to break out to the upside at that 452 level. That would be a sweet trade. You guys understand that it just could be a sweet trade. Noted, pre-existing, that pivot, that lateral structure to the left, which could operate as a level of deficiency in terms of the construction as well. This level of resistance across the top will be prepared for such. But as we're being invited to assess what's going on with the bulls and the bears, as the bulls are deciding if they want this pattern, right? The bulls are not just sitting here saying, well, do we want this specific pickup on the 20 moving average on the hourly? Is that what we want? No, the bulls are deciding, do we want? And remember the quick draw function in here. In terms of the specifics, let's look into, if I can find my measurement tool, there we go. The price range tool, bam. Now I'm going to draw this up as 10% on the hourly. That's a 10%. Check it out, guys. Important. 10% quick draw means what? If I'm looking at a 50% completion to the upside based on a 50% completion of the full amplitude, I can just draw this price range at 10% and say, okay, fine. I'm looking at about a 5% move potential to the upside over and above. Now, that's going to put us in a very interesting scenario. We've talked about this big kahuna trade. What we'd love to see on NVIDIA is this flat bottom support ascending line of resistance. You got it. This is a big mamma jamma trade. This is a big, nice pattern in play on the 4 hourly and the daily. You'll see it a bit more clearly than the hourly, but that's what's at stake. So as you look at this hourly reinforcement over or under the 20 moving average, currently we're bullish over the 20 moving average, but what's at stake is the breakout here potential of that 452. Keep eyes on that specific level. Very important, okay? Compromised a bit by the fact that we've got a bit of a flat bottom support, all right? Those like to get at least retested, all right? They do. Orders at that level, they like to get retested. But the dynamics in play as we look at that 4 hourly, again, the cap line, that's the decision that's in play. It's not just the bulls deciding, well, okay, great, I want this hourly, I want the hourly 20 moving average. That's what I want. No, the bulls are looking at, do I want to move for, let's say, a 5% move or a 10% move to the upside based upon this inverse head and shoulders, right? Now, it's going to get a little tricky if you were to look at your carry down. Let's just call this specific head and shoulders is going to give you a bit of a premature danger zone breakout of that inverse head and shoulders. So there, yes, we're deciding whether or not we want that inverse head and shoulders. Be prepared for the fact that we have that nested and somewhat irregular curvature and handle, which would require that 452. So if you're a bit on standby, it's okay for a bullish breakout trade with a tight stop loss. Be prepared to get retested if you enter on a breakout trade. be prepared to be retested. So we have that dynamic of a flat top resistance, need to clear that prior lateral level. You got it. And it's just requiring a bit more time than it should. Everyone agree? It's Friday. New York's sitting there like, man, it's time to go to lunch already. Let's do something. We're just stuck on. And that may just be where you hit the button and you sit, and we're gonna let the stops work this one out at the 20 moving average on the 20. The 20 moving average, guys, on the hourly. Let's just let the stops work this out. Where are the lower levels? Where are the lower levels? Okay, lower level going to be the specific pickup on this specific indicated preceding level of resistance. Is going to have some orders at that level. We're going to have that hourly lower pro line. We're going to have a little bit of a shift here on the 3-minute noted on that on the specific momentum. Noting the 5-hourly pushing laterally now, trying to get up and over the specific cap line. Let's look at the patterning. I want to look at the patterning. And now when I'm doing this, you know that the momentum has literally, guys, essentially gone in the market. I'm just going to say that when the momentum has slowed and shifted to such an extent that I want to dig down into my 5-minute, 3-minute, or 1-minute, okay? When the momentum has shifted that, you'll notice as we deal with the opens, at some point I want to dig into my lower time frames. When I start doing that personally, that means those higher time frames, those tactical levels, precise, high guys, hopefully high throttle, high energy, high G-force levels of impact, that they're just kind of stalling too much, right? So when they're stalling too much, I want to dig into my lower time frames. I want to see the patterning in play. I want to dig into, where's my 30-second, man? Where's my 30-second? Hunting for price action when we get the slowdown, or at least an establishment of the parameters, right? The establishment of the parameters on the specified higher time frames, right? When we know and we're locked in with what the daily is doing, with what the 4-hourly is doing, and what the weekly, okay, has done this week. When we're looking at that, guys, the lower time frames and essentially the dynamics in play. That's just that is a critical feature that we reach that level of engagement frequently in the market. Almost every day that we trade, you guys will agree, we'll reach a point where, okay, now we want to dig into the lower time frames. That means, and I reach that point with you nearly every session, and it just means that, okay, we've identified the larger levels in play, and from what we can gather, they are what they are. Okay, the pickup on the hourly, that's the call. The pickup on the hourly, we got it. Now, what can, I'm usually looking for a bit more action at that level, like what do the lower time frames have to offer us? What do we have to look at? What do these lower time frames have to offer us? In combination with looking at these lower time frames, what do I want to do? I want to establish any type of expanding volatility, without a doubt. That's the 1-2 punch, lower time frame. Okay, you can make it a dual punch there if you want to. Where are we at on any type of a volatility expression? Okay, there is the gold standard on the specific, and I want to know, did you find it? Did you already find it? Okay, because if I find this early, you're hitting buttons most likely based upon a potential delayed function. It also could be a bit of a high-risk situation to the extent that we could visit that. Is it the 4-hourly? Where are we at? We'd like to get the orders up on the specific 4-hourly 20 moving average bottom line. To the extent that we're holding, though, and we have a reinforcement on this pattern framework, worth noting. Let's just say worth noting in terms of this. I want you to challenge yourselves to find these patterns. Okay, I want you to be able to construct them just like it's second nature. Just like you get in the car and you drive the kids to work and you don't even remember the directions you took. You don't remember the rights from the left. It's operational. It just happens. When you're trading, I want you to get into the mode where you're identifying these, okay? And of course that you've traded enough of them to where you are clearly, guys, highly skilled in terms of the way that they're going to behave. Their potential for a breakdown further into a level of support, or even just a drag down into a fractional level they're in. Be prepared for the operation, and let's just say for additional downside at all points in time. We just have to remind you of that, because they can be tricky. They just can be tricky patterns, but they can also really be the top performers in the market. Looking at this diamond bottom formation, we are seeing a bit of a better conformance here, aren't we, in terms of the diamond bottom on NVIDIA than what we're looking at on the NASDAQ. right? Do we agree? You guys can assess that, but the NASDAQ really trying to push up and into and through that level of that support line. And we just would like to see a more conformant diamond bottom that could get the tech sector excited. Don't you agree? It could get the tech sector excited, but we're not quite seeing that. We can see that definitely better expressed, a touch better expressed, though it's reminiscent, isn't it? It's somewhat analogous to the pattern on the NASDAQ, this being NVIDIA. So we'll look for that replicated through Bitcoin. We'll look at that replicated through our crypto trades as we really hunt down. We love to see a great diamond pattern trade on Bitcoin, although do we see it? Well, she's picky on her diamonds. I would tell you that. As a matter of fact, she is very particular on her performance on diamonds. So we'll take them from NVIDIA and we'll take them from Tesla. But Bitcoin is very particular about how she decides to play those diamonds. Right? We know this, so just be cautious of such as you were to explore those trades on Bitcoin. So could be an exciting pattern. It would be an exciting, real clear indication that we could be moving to the upside, though, on the NASDAQ. So we are in flux. We are in, guys, this level of preceding support flipping, grinding. And she's doing something, isn't she, in terms of the specifics here of this level. Just bulls not giving up. Nice to see bulls not giving up. Look at the technology that we have coming out. I don't know who else might be on another planet or in the twilight zone. We have got some of the most exciting technology coming out in the history, literally, of technology. We have like self-communicating AI regenerative like tools. We literally have like self-driving vehicles. I suppose the argument could be, well, maybe things shouldn't get too awful hot right now, because when all of these products really deploy, it's going to be something else. It's going to be transformative of literally the way that we live. It already is. But at a level and scale, we would certainly expect, barring cataclysm, global, easy for me to say, cataclysm, barring global cataclysm, we would expect an absolute rifling of the NASDAQ and all the tech-related parties in terms of the corporations, et cetera. We would expect a you thought the preceding bull market was something. Sure. Well, let's get into into robot self-driving cars and the like of generative AI tools being deployed en masse across the planet. Like, are you kidding me? In terms of the type of market we should see, like, hello, guys, we should really see some phenomenal performance. Like, it's been okay, it's been nice, but these are transformative technologies. And if you're not plugged in there mentally, it's because you're not using the technologies. I'm going to say that if you're not plugged in mentally to the potential for AI, why we're excited about it, you've got to be on cloud nine, twilight zone, some other place to not realize the impact that technology should make in a relatively short amount of time, and is making in the marketplace, period. It's making it with us. It's making it with me in terms of development protocol. I can't find a programmer I really like to work with. I can work with ChatGPT without a doubt. And it's not easy to work with, but I can work with it. I can teach it. I can tell it how to do. It can frustrate me at times, but it's functional. It is as good as anybody I would want to specifically hire to fulfill its role. And it's capable of producing, guys, quite a bit. So from that to self-driving cars to Optimus, etc., whatever the robot may be. I note that Tesla isn't a first mover on that robot, Boston Dynamics. They've got them dancing and doing backflips, so they're going to have to, Tesla's going to have to recoup on that, without a doubt. Tesla's going to have to catch up for that to be a huge value consideration for me. I want to see it really accelerate beyond Boston Dynamics and a lot of other work that's been done on robots. Tesla got the advantage and the first mover advantage really on the electrical vehicles en masse now, and it has a commanding lead. But hey, let's give that some credit in differentiating the robot. It's just funny we're talking about robots, Optimus, but it could be a really cool deal. So they need to accelerate that project. Would really like to see acceleration of that product as we look at NVIDIA. Right? As we look at NVIDIA and the potential again for that 452 breakout, we're seeing a reinforcement here of that. And right about the time we started to get a little bit lazy, a little bit tired of the dynamics in play, just notice that we have a reinforcement of that, the no surrender line, we'll call it this morning, just a 1% move. It's okay. 1% rebound move. So it following in the footsteps of Bitcoin to some extent, we agree, took longer than Bitcoin did. And a nice express level here on the hourly. That's a consistent, that 20 moving average is a consistent level to appreciate on NVIDIA on that. And it's just a nice level to look at. It's over bullish, under bearish. I think that you will certainly clearly see that on the chart, but just a nice directed hit into that level. Let's take a look very quickly and give me about 2 seconds. Let me please have a sip of water. Thank you very much. I appreciate that very much. Thank you. Looking at the completion now of this pattern formation, we typically see this, okay, in terms of price action to the upside. We like to see what's our optimal hit here as we were to look at NVIDIA. We like to see the expression, guys, up and along that level of resistance. Is it required? Absolutely not. Are there compromises that the market is going to be looking at? Absolutely. What do those compromises look like? What do those curtailments look like? Okay, those challenges to getting up and over that specific level, what would they look like? Parallel carry downs at this specific level and in the other specific levels, right? We would identify any preceding pivots and just give it the framework that's required to express the potentiality of all of those levels of potential resistance in play, from parallel carry up to carry down. As we look at the Fire and Ice is really going to capture most, if not all, of those trend lines for you. Now, you would say, well, it's automatically going to work. Well, all of your trend lines are not automatically going to trade. It will express a trend line calculated through a dynamic process, guys, a very good process, but understand that not all the trend lines are going to hold. They're just not. So it's a matter of fact. Understand that precondition as an absolute fact as you look into those calculated trend lines on your Fire and Ice dynamics. Remember the ice cold short, right? Tough to hold on to. The specific fire sale, nice entry points. A little bit of a give back after the recognition of this pattern has sunk in through those who decided to get involved in the value zone on that 20 moving average on the hourly and down out of this specific volatility expansion. This is kind of the hot zone. We like to get involved in this zone. Ideally, it makes any operation along this level of resistance a lot easier, doesn't it? A lot more comfortable. If you're up in this zone here and you're saying, well, should I take, should I short? Of course, you're going to want to dig into your lower time frames, assess cross time frame what your specific momentum factors and considerations are. But when you're in this zone here, it's a lot easier to operate when you have an entry, a lower entry, at least along support, if not lower. This is kind of the hot zone. We look at getting down and underneath this specific level of support, even when we can, for a potential recoup to that level of resistance. You guys know the probabilities. They're not perfect at all. Let's take a look at, but they are very advantageous. Looking at the preceding level of resistance, flip to support. We see this dynamic in play so frequently that I literally chalk it up to just saying, well, we commonly see that in the market. So nice interplay that we saw and mentioned directly, I believe, on Tesla is kind of a shout out and a warning on Tesla yesterday as we saw the potential for that replay. And really Tesla just hammering to the downside. Let's look at Tesla down 2.8%. We have NVIDIA down 0.67, so holding well. And Bitcoin still managing to hold in the green. So nicely done on Bitcoin with that throwback again. And she's decided to kind of pause and hang out at the preceding level of support on that triangulation, this throwback measurement after, again, the bust. Just be prepared for some tricky price action. It looks like on that hourly, we're underneath the specific 20 moving average being reinforced on Bitcoin now on the lines after some real nice trajectory up into our top pro line. This is good trading right now, looking on the line feature just underneath the specific 20 moving average, whereas on NVIDIA we have held up and over that specific 20 moving average on that hourly time frame. So let's take a look at Tesla and do some additional assessments in terms of where we are and where it looks like we may be headed. Let's take a look at the level of engagement. We didn't get the hit on the 4-hourly cap line. Are we going to call this within threshold or not? I'm going to leave it up to you. In terms of the measurement of that 4-hourly cap line, I'm just going to leave it up to you, okay? In terms of the differential there, we can assess it, but we get into the real fine-tooth comb looking at 0.15%. Let me go ahead and add on some decimals here. We'll look at it. It's going to be tricky as really I am a firm believer in the fact, and you can assess this with me, Tesla is so volatile. If she is overly conformant in technicals, now she's good. She's given us a lot to look at, but if she's overly conformant in technicals, she will produce a lot of cash. You know this, if you trade frequently on Tesla, there's enough volatility in the equation. Now you're off by 28 cents here, 0.11% from your specific cap line. You can say that's within threshold, a 0.11%, okay. 0.11%, 28 cents. You want to call it a quarter on 250 bucks? Like 0.1% within threshold, we'll call it. We'll say, yeah. We'd like to see the visual direct hit though. That gives us kind of that signal, the interaction, and yes, the framework of saying, yes, we hit the lower, we hit the specific cap line, that RSI stochastic and MACD calculated line. It's a big deal. So when we look at, it's a big deal because once bullish, we look for a rehit on that line. We frequently see it. But as you assess the interaction, you do need to not play devil's advocate and start to overhunt the price action, but we do need to assess that we may be off by a literal quarter. Okay, you may need to play a quarter strong on this. Okay, in terms of your pickups on your cap line, on your larger time frames, be it known herein that you may need to play a little bit rough with the market. You might need to raise up the ante by a quarter. Okay, so this is 1 and 2 times where it's telling us we might want to be prepared for an adjustment of 1 quarter, and we're jealous over the opportunity to not have to do so. We are stringently looking for that to not be required of us. I'm going to say that very frankly. We are very specifically looking in the market for the requirement that we wouldn't have to do that. Okay, that we would instead get a perfect quote unquote hit on the 20 moving average, let's say on the 4 hourly. Now at some point, we're literally going to be measuring the specific top to bottom of the actual, here we go, of the actual line. And that's going to be 5 cents. So as you're looking at the literal expression of the thickness of the line and the 20 moving average as being a nickel, okay? And we're looking at literally, guys, a nickel on 250 bucks, okay? As you're looking at the literal expression of the cap line and measuring, well, this is a quarter. We're going to have to make some adjustments. We just would prefer, being technically oriented, that we're going to see the direct contact. We do, I guess, I don't think we can. I will not agree that it's within a challenging framework at all in the markets for that to even be well presented to us in the form of a technical conformance. I disagree. I think the markets are more than capable of giving us the hit if they want it. I in fact know that they are, with the levels of calculations, advanced calculations that they are involved in producing. They just are. They've been at, they've had a calculator and a computer in front of them for quite a while. I'm sure that they can do what they would intend to do, or what what they would want to do. I will say though that the challenge involved in a pickup at a really highly specific level and a really precise level, those are, I would like to say, unique and really highly prized, a highly prized skill set if you are, and to the extent that you are developing into that framework, give yourself a bit of a deep breath and an understanding that there are few traders who can exceptionally really trade well at that level, and you're doing very well. Okay, so the notion that we're having discussions about a quarter or a nickel on $250 of price action, just understand it is a battle worth getting into. It is a skill set that if you miss it, next. That's it, guys. If you miss it, next. Let's roll with it. Let's get into it and let's see how precise we can develop that, because it's just something that long-term, I'm going to be so impressed when you develop the skill set. Looking at a 1.8% move from that quarter off entry at the specific cap line feature. Nicely done. And let's dig into the specific targets to the downside and see where we did pick up. Right, we pushed below on the maximized targets to the downside. We pushed below, right, that golden pocket on the candle wicks into, not into the 786. Now we got to the classic 86, about 90% of the way to the price target of the full completion on the line designated targets on the 5 minutes. So a near 100% completion rate. What traded on both? the 50% clearly traded on both. Okay, that 50% on the candle wicks traded quite nicely. You guys agree on the specific high to low measurement, carried down extensions, the 50% target. You see a nice grind on that level, and certainly it's taken an hour. It has taken a whole hour to produce. If we were to just measure those original ones, a 1.2% move. Come on, Tesla. But what are we noting? We're noting the fact that that max probability move on the wicks traded well. Let me actually measure that. Let me actually measure on, because I measured it from the golden pocket where we noted it. I won't measure it from the golden pocket. We'll say a 0.84%, okay, with a push below, so you'd have to stay long and out of credit. So a 0.7% push with a 0.8% gain. So that's a 50-50 march there as we're looking at a throwback in the direction of the breakout preceding flat bottom support, which we note, okay, out of fairness, we do note that. And I just picked up on the 61.8 because of the fact that we had scheduled in and brought that to your attention. So not that you should have or needed to get involved in that level, but just in terms of where we had brought it up, that's why I made that differential in terms of the measurement from that level originally. So golden pocket, always a level of consideration, not to say, though, that we would not want to heavily consider because we discuss it with such frequency, just a flat out doing it yourself, looking at a 0.87% on the pickup to the upside from that 50%. That's the key consideration that I want to schedule into, aside from the fact, well, we discussed it at the golden pocket. Throw that out the door. I don't want to discuss that per se in terms of the measurement. My key consideration is that ability for us to measure from the max probability move, which is to that 50%. Where are we at? How much did we push? And it's just a great discussion to engage in as you're looking for precise entries on larger time frames, and particularly that quarter off by 25 cents in terms of the pickup on the specific cap line of the 4 hourly. Note such, okay? Just note such. And if we were to look at that specific full completion down, where would we have been? About to that 786. Just note that about to that 786 up on this specific time frame, that lower time frame here on the 5 minute, we would have been at that 786. Note such, that cap line was calculated to the 786 in this instance. It doesn't mean that that will be calculated to such on each and every instance, right? So a nice move to the downside, a little bit of an over completion past that 50%, though we are seeing the bulls engage and recover and essentially accomplish what we saw Bitcoin do in quick fashion. Not that there's an overriding interest in Bitcoin that just cannot be, cannot be ignored, but yes, indeed, that is what we're seeing. But we're seeing nice moves on Tesla, nice moves on NVDA after a bit of a lackluster guys performance due to the jobs report. Now, what I'll say is, again, I've got my eye on the prize up along the top at 452, 452. Now, you know it's unpopular, and it was unpopular when I said it. You know this? Yes, it was. You guys need to mind this, or just mind yourselves that I did this. Noted, London, noted. What was it? Not only, okay, great pickup on the 20 moving average on the hourly on NVIDIA, fine. But yeah, I'm the cat that's going to be talking about the level to break on resistance is up along the top here. Why? Because we do have a reinforceable level being the 20 moving average, right? So bulls want it to take it up and over this level is ideally the trade of the day. That's a beautiful trade. So when you're looking at, and you're all zoned in on your 3 minute, your 5 minute, these micro time frames of what we're doing and how we're doing it. Guys, if you're on this micro journey where, you know, we're adding on 15 cents to $445 all the time, you know, I want you focused on these. Bam, nice move. What's up, VIP? Way to trade. Nice expansion of volatility. We see this with frequency. Now we're looking at what? I don't know. We're looking at a breakout of this pattern on the 3 minute. The 3 minute expresses some relevance here because we do have this stair step of a move to get up and out and over on the 3 minute. Yes, to there after domino it up from the 3 minute into that specific hourly. And we need to crush through that 451.66 market target. Bulls, if you want it, and that's what we're seeing on the 3 minute is this specific formation of that curvature and that handle. So fractaled through, preceding the level of resistance to get beaten. But yes, assess what your pickup means in the context, please, of the overall patterning at work. The guy who's looking at the 10% move that's sitting on the table right now, the trader who's looking at the 10% move on the table right now, potentially to the upside, is going to completely differently trade this pickup. You know this, going to completely differently trade this pickup than the trader who's just looking at this for the sole purposes of a quick flash trade. Okay, so that's part of this. If we were to talk about the ability to multitask, in this instance, it's relative or relating to your orders. Okay, in terms of a flash trade entry here, sure, boom, boom. Or is the trade big enough? Is the trade big enough on entry to accommodate a taking of some profit at this level, okay, quickly, okay, to accommodate for the fact that this level could not hold, to where you're still satisfied with the profit equation, both on a quick take basis, flash trade, immediate short time frame trade, and you've got a significant carry potential to the upside. The answer is literally an equation for you to deal with. It's literally an equation in terms of both your precision level of entry on NVIDIA, your precise level of entry here, if you're going to execute 2 orders, okay? How quickly can you do that? It gave us a bit of time, at least in the zone. The flash trade versus the carry trade, okay, discussion is one that we can further refine if you're aware of the need for both and how they can essentially accompany one another, complement one another, and reinforce your operation to keep you happy in the market. That's my goal. When we have those kind of discussions, that's what we're talking about, okay? Keeping you happy in the market. Making sure you're happy with the market and you're happy with the returns in the market. That's ideal, right? We don't want you too happy. Huh? I'm sure the exchanges would say that to you, but measuring and taking a look at what is my 1 hourly pickup here mean in the context of a potential move here. So it's not always popular when you just at least notice where you're at, but down due to the news this morning, just saying, yes, this would be the pattern in play. Start to train yourself to configure those macro dynamics in play, because it's been a really strong week here. You guys have to admit it's been a strong, trying to carry into a strong 2 weeks, right? So we're going to have to reverse this 2-week trajectory, and this is the opportunity for bulls to reinforce or bulls to fail today, really. We can continue to grind along this level, but it's been 2 weeks. I mean, having a blowout Friday on some strong jobs news, that's going to be, I don't want to get into the contra way of thinking, the counterintuitive approach to the market. I don't want to get too awful involved in that. Let's note for the fact the 4 hourly off by a quarter on the cap line pickup. Let's note the reinforcement on NVIDIA at the specific 20 moving average. Beautifully well done. Let's see this trade up work itself out. It's going to work itself out somehow. Be it inverse head and shoulders or the dynamic here. We talked about that differentiation, and we will discuss to the extent that we are currently up and out and over. Let's take a look at this neckline real quickly just to reinforce where we're at. It could be a good move. You guys got that. Could be a nice move. Let's go, NVIDIA. Let's see what you got in the tank. It'd be just a heck of a Friday, wouldn't it? At resistance, at the neckline. Nice pickup. We have to admit that. Nice pickup on that hourly. So I'm excited anytime that I see, bam, anytime I see you in the money, the bottom line, anytime I see the tactics reinforced, I'm excited. I'm excited because we will take them from here without a doubt, and we will apply them to Bitcoin, which when she gets up and screaming, when she decides to really traject to the roof, very few can compete with her in terms of volatility. So we're paying attention to that next Bitcoin move. And the traders who can trade Bitcoin well, I'll tell you, you go into a room full of pro traders, okay? I can introduce you to as many as you probably would want to hear that would have this answer, because I've met them personally and dealt with them. I'm going to tell you, you're going to have a room full of pro traders that are going to look at you when you say that you trade Bitcoin. They say, oh, that's too volatile for me. The pat standard answer from all the pro traders are going to be, that's, and I got enough phone numbers for you to call if you need to just get that answer for your own level of satisfaction. But it's, no, that's too volatile for me. Yeah, okay, so that's the pat answer that you're going to get with Bitcoin. That means that there's opportunity there. If you can capture the volatility, or fire and ice is nice, isn't it? Fire and ice just rocks and rolls. Such a critical tool. Really, you cannot guys, just appreciate that statement. I'm very excited for everyone who's made the completion of that and its operation in the market really continually possible. We really appreciate that in terms of the dynamic value that serves. In terms of the chats, let me configure into it. Guys, it's Friday. We're ready for a VIP weekend. Does that sound good? I hope so. Let me take a look at where we're at in terms of the chats, if anything. Let me see. Great stuff on a video, 15-minute, amazing charts. And TA and good morning VIP. Nice to see you, Venus. Good morning. Boom. Let's say boom, 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 boom. There we go, Venus. Nice to see you as well. I want to encourage you all to apply the fundamentals. And Venus, I know you're just rocking and rolling every day. It's been such a pleasure to be building with you for, I don't want to say for like a year now. Look at what we've done in a year. It's awesome, isn't it? I'm really excited to be building with you in 2023 and beyond. I don't know anyone who's done it better. I have to say that I'm not going to brag, but I assess those things. Guys, hello. I have to assess those things. So I just have to say that as a compliment, just a compliment to, really let's start with the whole group. And I think Venus will agree with the whole group. We'll give the credit to the group dynamics without a doubt. That's what's been fostering just the entirety of the opportunity. And the credit goes then to Venus. Nice to be building with you without a doubt. The market's never without its challenges. We know that. But with that said, it's just been a really gangbuster year thus far. We said we would take it by storm, and it's been a really nice year thus far. 2024, I just want to encourage all of you, and those are the groups that we're giving credit to, the group and then Venus, and then I'll just reflect the energy that you guys can give to me. But I'm looking at you and your development and excited about the technical proficiency that you're developing in the market. I'm not sure that you realize how unique it is, okay? I can attest to the fact of how unique it is. I'm not sure that you understand how unique it is to be able to deploy a skill set as proficiently as you are either doing or attempting to do. I see the levels of proficiency that you develop, and it's just unique. It's not a what we just call it. It's not a generic level as we look at Bitcoin in this. And you know exactly how to trade this. Everyone does in the group. You all know how to trade this, and that was a perfect completion up to that 50% on the target. Boom, nicely done. We note that on Bitcoin. Nice technical conformance again on that volatility that no one wants to really handle, right? No one really wants to handle that volatility, but you see the perfect completion up to that 50%, where we're not even getting that on per se our equity analytics, right? So that's a big deal that we would note that. I just deleted something. Notice what I just deleted though. Big deal or not? Big deal. Perfect exact hit into the 50%. So while people are afraid to trade Bitcoin, it's got like perfect technical conformance, like literally down to the literal dollar, bam. So while people would be, and this is the story, the name of the game, if volatility is pushing you aside or you're cautious of it, when you can find that technical conformance, that's what we get excited about. We want the volatility, then we want the patterns and the tactics to be able to take advantage of said volatility. And if we can find the asset, i.e. Bitcoin and the other assets that would be highly volatile, and we can find the tactics, the patterns, those probabilities that are going to allow us to capture the profit in the market on said assets, it just puts us in a very unique, let's say in a unique position, because we're so particularly specific about our tactics. And that's what, just from an operational standpoint, as we were to look at our operation in the market, it's just something that we really enjoy and appreciate, the ability to continually engage in said dynamics. It's just great. We've really made a lot of progress this year. Indicators otherwise. Some of these are point and shoot, guys. Go to the gun range, blindfold yourself, and get ready to shoot the skeet. It's just going to work. We got magic bullets in this thing, right? But as you look at it, some of these are really, really nice. Looking at this bit of a cupature and handle formation here, we're seeing this irregular V-shaped bottom. Double bottom, no. Ascending triangle, no. We're going to have to call it, and it's like the more you stretch this out, oh, there we go. Now we've got more of a cupature and a handle, but we're seeing that as the challenge right now, a confluence on the 5-minute, as we're looking at NVDA wanting to test out up and above the specific breakout level here in resistance engaged. So we're seeing that on the 5-minute, lower time frame of Bitcoin lower time frame of NVIDIA, okay, and that on Tesla we're seeing a little bit of a differential on Tesla, a little bit more aggressive. Tesla was pre-market and on into the open in no man's land with an open under preceding level of resistance to support. And just note again, key level pickups, the fact that you're plugged into Capline on the 4 hourly, the fact that you're plugged into the specific pickup on the 20 moving average on the hourly, and the fact that Bitcoin, that you're privy to and understand the 8 hourly lower pro line. If you didn't catch them, get your screens up, get your setup together, get your guys, get the information out in front of you, learn to assemble it properly, and understand I can only present you so much information on one screen. Now, it's Friday. Let's get ready for a great weekend. This is London with Bitcoin Spike and VIP Trader. Great open, great week. We'll try and come to the scoreboard here towards the end of the day so we can set this back up and hopefully have a rock and roll discussion. I will tell you about it. I know you're looking at NVIDIA right now because it is worth looking at. You got it, huh? Get up and out. Come on. We don't want to scream at the screen, right? But get on with it, NVIDIA. It's just primed. We're not the only ones that are screaming at their screens, huh? I guarantee you, huh? I promise you that. You know, we're not the only bulls in town that are trying to get this thing to get up and out. It's too close, huh? It could be a nice move. It's just there. It's there if the bulls want it. Stay plugged in today. It's going to be a good day for NVIDIA. What do we need to break? You guys got that. Draw it out in terms of the level breakout of the up and over. And it's really one of those situations we don't have anything to discuss. We do not have anything to discuss if you don't get over the 451. Call it 451. Let me just exactly pinpoint it on the wicks. Should be the same as what I gave you before exactly. But 451.82, you got to get up over the 451.82 or we don't have anything to talk about. Correct? Yeah, you got to get up and over. You got to get up over the 451.82 or we might as well go home, guys. The bulls might as well go home. I mean, between here and there, it's going to be some excitement. We need that momentum to flow. Let's take a look at the momentum on the lower time frames versus the higher time frames. We've switched bull on the 3 minute, on the we're going to call this 5 minute. There we go. On the 15 minute, let me replace 15 into where I have the 30. Let me dig down. I want to put the specific 30 and tuck it down on the bottom right instead of that monthly for a minute. We'll also note, see, I'm glad I didn't have the 30 minute up. Look at the push below on that 20 moving average. We're going to redo that. 30 minute is friend or foe. We say that all the time. It can be very friendly and it can cause a lot of problems, right? Not exactly that, not exactly the ideal. So let's take a look at it. We'll note that NVIDIA pushed into quite a bit and below the 4 hourly pickup on the cap line. So Tesla dancing around in no man's land a little bit right now compared to NVIDIA. True? Yes. Tesla dancing around a little bit in no man's land in terms of its current price action. Okay. A little bit frustrated, but it had a cleaner pickup on the cap line in the 4 hourly. Yay. So we note such. Okay. NVIDIA, perfect pickup on the 20 moving average on the hourly, but pushing into below and sweating a little bit on that pickup on the cap line. So we'll note such. We will note that those that those breakouts are going to require NVIDIA to push up and over. What is this line engaged? 4 hourly, the upper pro line. The upper pro line is the level that's been trading. Yes, on the 4 hourly, we pay attention to such, flexing, hitting right into our calculated level. You see that? That's a dotted line. That's what's going on. You want to know who's trading why, where, and what? That's what's going on. The traders are hitting that top pro line. Boom. That's proficiency. That's nice. So we'll note that on the bottom line struggle, pick up Fire and Ice really hammering in terms of its level of specificity, right? Its level of precision. That trade-off is just right in front of your face. It's just, it engaged, right? So again, I would just like to encourage you to refine your guys, refine everything about your trade game. Continue to improve your trade game. Continue to challenge yourself. Don't let any facet that you know you can better yourself upon. Don't let it go quiet. Don't let it just sit over in the corner and just not receive any attention. If you have something in your trade game that needs attention, get after it. Rock and roll it. Get ready with it. Get done with it. Let's make some progress in 2023. We're already doing so well and have done, guys, so well. I'm so excited about 2023 thus far, and I'm just really looking forward to what 2024 can bring. I'd like to see a huge, quote me, close on 2024. I'd like to see a huge closeout in Q4 2024, Q4 2023. But in terms of the dynamics for next year, guys, it's as we'll call it. It's there between now and then. Your level of proficiency that you build into and roll into 2024 with. Guys, I know you guys. I know you as a group. I know you individually. So to say that I want you all to be successful, it's not like a tagline that we're just going to sit around and talk about. And, well, isn't that exciting? Someone else wants someone else to be successful in the market. Oh, wow, we've heard that one before. I know you all. This is personal. We got to get this right in terms of if you're still practicing, get it right. If you know you have, let's say, challenges in the market, let's get through them. If you know how to identify these or not in the market, I want you to practice on it. I want you to figure out, why did this just go to the upside? No one in VIP needs to be explained that specific lesson. Nice to see our approach in the market continually work well. And again, I just want to shout out and thank everyone who makes that possible. Bottom line, from Bolkowski to any more intermediate players who help really do a lot of really above the call of duty type work in terms of the empirical framework. And it's Bolkowski, et cetera, who may have a hand in assessing that or implementing that in the markets. And I really appreciate that. I mean that. So looking at a potential breakout, let's just assess this 4 hourly. You got to get up and over. And then the bears are sitting on that line saying, give me one more small flash trade. Just give me something else I can book. Give me one more trade I can book at this top pro line in the 4 hourly. Just as much as we're wanting that breakout, they know where we're at. The good traders, they know exactly where we're at. You guys know that, huh? Without a doubt. Like, just give me one more. Come on, give me one more. So those are tight zones, right? And when you see something that tight, it's like, yeah, a guy is throwing quite a bit of cash into an equation at a highly specific level, trying to get a flex. Take. Yeah? Just flexing in power moves. Boom, boom, boom. Now, your interaction with the exchange is going to dictate the level at which you can take or not on this level of a move, but it's a great discussion because you know it's a reinforceable level. It is. I hate to say for a carry basis or otherwise. Don't you hate to hear it? It just is a reinforceable level. Just don't say that. Just don't say it's a reinforceable level for a carry trade. Come on. We are breaking out. True, right? True to form. Let's take a look at the 15-minute. Let's take a look at that 15-minute, see where we're up. We haven't hit that golden short yet. This is why it's a potential reinforceable move to the downside. Why? And you can't play both sides of the fence perfectly and ever. You can't switch hit at the same time, right? The batter may be in the box, and Sammy Sosa's got a heck of a right-hand swing. He's also got a heck of an approach from the left. Right? He can hit a home run from either side, let's say. Now, he just can't hit from both sides of the plate at the same time, right? So I'm going to give you that. I'm going to give you that within the discretionary framework of you deciding, well, who's the pitcher? Who are we playing against? What inning is it? You know, do we really need a home run right now? Is it time? Do I need to hammer in on the right or on the left in terms of the kind of switch hitting? Where's the momentum taking us? What are the other factors? And which direction is the wind? You're going to get to a pro hitter saying, okay, which direction is the wind? He's hitting from the right or the left. Which direction is the wind? You're going to get into some advanced issues as you start to really talk and season up within the pros. As we look at, let's just look at where are we at on this. And you gotta admit, guys, what is it? It's a 0.24% on heavy cash. And the question is what? Now, this is always going to be a question. Now, here is a good question for you. If you got in 0.24, 0.25% from the top line pro, did you, and if you didn't, it's okay, but understand, seeing the flex down to 0.24% on this move on NVIDIA. Did you, okay, first of all, can you, and I want to know if it's even technically possible, can you engage in two trades at one time? Yes, okay, for a carry and a flash. Yes. Now, there's a profit equation, which isn't necessarily simple, based upon your Let's not get too far into the technicals, okay, or too far into calculatives. But in terms of a volatility gauge with your anticipated stop loss, let's just say tied in with your anticipated stop loss, a volatility gauge that's tied in with your degree of risk exposure, okay, as you're looking at your ability to execute 2 trades, okay, on a repeat level precision hit, or to schedule in a trade, to take on said trade at, let's say, 0.25. To take on said trade at 0.25, release for profit, be fully satisfied on your flash trade. Okay? And if you're executing 1 trade, to leave a residual to either, and explore this, we haven't discussed this, to leave a residual to potentially hit again, okay? To potentially hit again at the same level. And you're talking about some different dynamics that we would spend more than just a few minutes on, okay? Clearly, we could spend several full days on these issues. Okay, not a few minutes, but calculatively looking at an entry for 0.24, a take quickly, okay, on either 1 or 2 trades, a flash trade and a carry trade. All right, if it's the same trade, if you're extracting profit from the equation and maintaining on a flash basis and maintaining your carry trade, if you're re-engaging, these are all different processes. If you're re-engaging at the secondary hit versus allowing for a secondary hit, I'm going to allow this to re-engage, and based upon, you start to look at your other factors of consideration, such as, are we fighting? Are we absolutely fighting? And you're really dealing with, guys, the multiplicity of issues that you're dealing with in terms of a confirmation, the rapidity with which the frequency with which your trade level is engaging. Will you be able to execute a new entry at said level of resistance? Do you have a standard 1-2 punch every time you get up into the bag? Every time you get up into the flash bag, the quick hit bag, the boxing bag, right? Every time you get up into it, it's bam, bam with the right, bam, bam with the left, back, right? Your process is in play, right? If you're hitting a speed bag, bam, bam with the right, bam, bam with the left, then right, left, right. However you're built into tactically engaging in the market, I bring that up because you may have just a solid right, bam, solid right, bam, solid right, bam. Okay, you may have a different frequency of engagement in the market, which is going to structure you differently than the guy who gets up and it's bam, 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 bam with the right, right, left, left, right, left. You know, it's just going to be different. Not that you have to get into that level of proficiency immediately, but you need to understand when things react quickly in this zone, your ability to negotiate either multiple trades, much less on multiple assets. Much less on multiple assets. And I know you're thinking, okay, well, this could be done on one asset. Great. Envision it, structure your mind around what could be possible, what is possible on one asset. Then consider multiple assets. Okay, there is a functional limitation that you're going to reach. Yes. So my question to you now is, please, have you assessed your interaction with the market? Okay, have you assessed your interaction with the market? Are you in a position right now, as we looked at a clear entry on that, we discussed it during this great stream for Friday, your level of engagement at the top pro line. Are you comfortable with your flash and your carry trade opportunity here? Are you? If not, what do you need to adjust in order to create a higher level of comfort and to satisfy, let's just say, your enjoyment of the market and your profits, enjoyment of the profits from the market? What needs to be done? It could be that you're focused on too many assets. And if you're focused on too many assets, as much as you don't want to miss and you've got the FOMO running and you just have to trade, it's like, no, I trade 5 assets all the time. All right, man, if you're trading 5 assets all the time, unless you've got guys, come on. You're trading 5 assets, you're gonna be flash trading and carry trading and positioning around and managing your futures on 5 assets? Everybody wants to hire you, I promise you. You have no problem. You don't need to trade. You go qualify for $1 million desk anywhere. Most likely, guys, you're going to trade 5 assets proficiently? No, guys, you're trying to become superhuman, literally. So as you look at this, at least start with the assessment. I entered into 1 trade. I have a potential for that trade to be a carry trade, okay? And I have scheduled in enough to where I'm happy with the 30-second, 1 minute, 3-second, whatever it may be, but I'm happy with the frequency and profit equation that it just provided me. Literally to where you're like, no, I'm fine, I'm cool. I'll close this out, or I will be happy if and to the extent that this closes, it closes in terms of a stop, re-engagement. You're starting to get into some issues like, well, if my stop is a re-engagement and I have another trade coming, you've got some complications here. You're going to have traders who have set up their strategy to hit, right? The repeat orders, standing order, possible, you got it, okay? To the extent that we're looking at right now, the immediate concern is that you appreciate the fact that there's a flash trade opportunity, a faster, in terms of the frequency duration. You're looking at a higher frequency trade, okay? Versus the carry trade. I want you to assess, please. It sounds like we're talking about just the same old thing. This is the most critical issue that you're dealing with right now. I will tell you, it's the most critical feature that traders don't want to address is, well, how am I supposed to get a trade that goes for 10 times my money? Or how am I supposed to get a trade that goes for 30 times my money? You have to have a carry trade. You just have to. And you're going to want to designate the trade opportunities, not just within a top pro line on the 4-hourly. Okay, typically. We want to look at and I'm bringing up whether it's your execution, your level of execution right now, okay? Just bringing it up while it's right in front of our face, right? As we're at a significant level that we see engage frequently, being in a top pro line on the 4-hourly. It's a significant level. It just is. So while we're excited about the breakout here on NVIDIA, but as complicating as I can make the discussion in terms of our appreciation for the dynamics that are in play, I understand is that confusing. There are methods to engage in. Okay, there are methods to engage in. Let's do something good and just measure the hit from the 20 moving average to the upside this morning. 2.34%, very nicely done. Okay, very, very nicely done. There are methods to increase the level of functionality that you'll have with the market. Okay, your proficiency in dealing with the market. Some of those methods that we would talk about in terms of execution, okay, are they're a little bit more on a different level. Okay. A little bit more on a different level, and we talk about increased like programming. When you're getting into additional programming, it's just easier on the front end. I'm going to tell you it's easier on this end just to talk about the challenge it would be for you to sit and execute and to execute and to execute. We can talk about programming, and it can work to your benefit. It can work to your disadvantage, and it's really as you see the indicators, et cetera, that we've coded this year. Just understand it can be. It seems like there is a solution, a programmatic solution, and an execution solution to what's being discussed here, but that doesn't mean that it's an easier discussion. And so it may seem a bit, it may seem like an issue that you don't necessarily want to deal with. The solution is not necessarily simpler, okay? The solution can get more complicated and depending upon how complicated you want to get or robust in terms of a solution, it can either work or not work. That's the other situation. It can either make money on the whole or not. So these are challenges to discuss while we're looking at price action is the bottom line. Let's review the Tesla pickup on the specific cap line feature. We're a quarter off on $250. Nice cap line. We'll call that within threshold in terms of the hit opening underneath the specific 20 moving average on the daily. This reminds of Bitcoin and the price action on the specific 4-hourly recently crossed under with that glide where the shorts are ready to engage underneath after a cross under, right? So we will note Tesla though with a decent rebound, a little bit delayed. We saw that rebound again on Bitcoin. We saw that on Bitcoin. I just want to challenge you if you received well the discussion or not. Enter a trade intentionally. I don't care how you do it. Enter a trade intentionally with the following intention. want you to have a flash trade in it, and I want you to have a carry trade in it. And I want you to challenge yourself, yeah, but if I take whatever your but is and your hesitation, the problem you're encountering, solve it. Solve it on the front end of the trade. If you're entering into one trade, I want you to have enough to comfortably and reasonably be satisfied. If you get the flash trade that you want, that quick, high frequency trade, boom, you're happy. You're happy if the whole thing washes out. Perfect. Okay? But it has a carry trade component to it. Okay? So your take profit leaves your carry trade potential. You're ready to let the residual of it, let it roll. Right? And you can get into some structured dynamics within one trade where you say, okay, well, fine. Well, I may have different take profits scheduled along the way. Right? We can get into some different discussions. People just, if you start wanting take profit levels across the board, we're not going to program like that. I'm just going to tell you, we're not. I rarely see successful traders who receive programming like that. I will promise you, period. Okay? So right now we focus on a flash trade, composite or composed or situated with a carry trade dynamic. Can you execute two trades at the same time? You can. Satisfy both interests, purposely, intentionally engage in one trade, at least one. And if you do one, then do 5. Okay? Mark my words. Do one like that. Call it 100 rounds or whatnot. We've had a lot of success with 100 rounds, guys. Huge amounts of success with 100 rounds, our day trader training tactic. Do one trade where you have a carry and a frequency trade, a high frequency trade involved, okay? Purpose yourself to do one. Then when you've done one, do 5. Then start seeing the kind of questions that will pop up. All right? The discussion that we're able to have in terms of that composite structured trade, it's going to change when you've done 5 of them. All right? Very good. Now, in the context thereof, once you've done 50 of them, imagine then we're halfway towards, thank gosh, huh? Now it goes without saying. Now you completely understand and you're telling me exactly what I've been telling you. But I tell you have to trade one of them. And once you've traded one, trade 5. Then once you've traded 5, hit 50. And when you've done 50, then we're going to be talking. I know that you agree because you've all done 100 rounds. The volume is going to dictate, you know this, the volume, the number of trades that you have is going to dictate oftentimes your level of success in the market, right? So, difficult open. We were prepared for this specific preceding double top on Tesla, right? You got it right. What did she go down and pick up along that specific, by a quarter, guys, the specific pro line on cap line? I cannot wait until you've done 50 of these. Oh, thank God. Thank God. Once you've done 50, oh gosh, it's going to be nice. Huh? I'm really excited for when you can tell me, no, actually, I've done 50 of these, 50 flash trades, and I've maintained a carry trade position therein. Now, you're going to know and you're going to start to understand, within the first 5, you're going to start to understand, well, does this one need a carry trade? Right? What's my carry trade amount? My carry trade amount may actually depend upon which time frame I'm on. The patterns in play. You're going to get to the point where you're going to realize that there are some differentials in play, and why we really, if we were to look at the the daily, the 4 hourly, the 8 hourly on equities, right? If we were to look at some of these larger time frames, why we're focused on these time frames, I'm just going to say that you're going to find that there's more to the question. I just encourage you all to continue to develop your game. Look at the daily right now as we are pushing up and over this level. It's been reinforced 1, 2, 3 times. What do I want to do here? I want to schedule in. I want to bring this line over to, let's say, the 4 hourly. Let's bring it over to the 4 hourly. What would we like to see is a clean break somewhere on some time frame. We agree? You got it. We got 2 hours and 22 minutes left on this specific feature set here. Okay, so as we're pushing into that top pro line, we're pushing up and over, trying to get up and over and past this level of resistance. This might be a really sweet area. I don't want it to take this long. Just could be a really sweet area for another level of engagement. Boom. If we decide to stall out sideways, we don't want to stall too hard, too long on a Friday. We agree? Without a doubt. But then we start to go into the, let's say, the hourly. All right, now the hourly, we have a different story. We have a little bit of a higher level threshold, level of resistance breakout. Understand what I'm looking for is a breakout in a candle set up and over the preceding candles. The buyers can distinctly reinforce, boom, to the upside. Levels of engagement, entry, bam, long, boom, up and over. Don't have it on the daily. Do we have it on the 4 hourly? No. So what am I going to do? I'm talking about a clean candle set. I want a clean candle set, boom, reinforceable, bam, up and over. Well, then I just walk my way down further into the hourly. Do we have it on the hourly? Yeah. We've got a higher threshold, higher lateral point here, mid-level. You got it. So this is not necessarily ideal. I'd prefer to have and be at some threshold on some time frame to where I have a clean candle set up and over where I can reinforce a line. I don't like to reinforce a line if the line is sloping, right? To the extent that there's a sloping line, a downward sloping line, why don't I like that? Why don't I like that as a trader? Well, because if I'm trying to go long, let's just say I'm trying to go long on a line that is sloping, downward sloping line, it's just not really attractive to me because continually, while I'll fight a little bit of that fight in terms of this lower threshold pickup, you know, I'll just tell you, there are orders in a downward, essentially that are scaled down. So we have long scaled down. And instead of just getting a little bit of value underneath a line, a little touch of value underneath a line, what are we really doing? Well, if I'm getting a little value underneath a line, just slightly under a line, trying to beat the market just with a little small pickup right underneath the line, here it's like, well, my little pickup just slightly below the line is really really down here, right? So we're starting to really push into the dynamic of what makes it difficult and why we don't prefer a downward sloping neckline, right? On an inverse head and shoulders. So what becomes important, we don't get that advantage we're looking for in terms of the breakout of the preceding in that 451, we've said it enough times, haven't we? Let's just call it 451.80 or so. We said up and over. That is our breakout potential today. And we have that frustrating. The first level of business seems to be the participants deciding what they want to do with this inverse head and shoulder. So it's nice to be in this position to have a bit of a quandary to discuss. It's nice to see you all engage in direct discussion as we see the pro line engage up and through. Let's take a look at the lower time frame. Let's see what's going on in this lower time frame now. How many hits did we have? Did you get at that specific lower pro line? Let's take a look. Let's take the some of these indicators up and off of the lower time frame. Let's look at this specific level of resistance on the specific 3 minute. Let's look at the hurdles we have on the lower time frames. I hope you are all doing well, and I hope that you are. And this is the action up and around that specific. As we were to look at the specific 4 hourly top pro line. Okay, we'll take a look at our momentum. We'll bring that into the equation. Let's take a look at cross dynamics here in terms of just the breakout up and through. If we're to look at the curvature and the handle formation, it's the bulls that they wanted, right? It is a clean breakout on the lines. We've broken out of this cross structure here. Do we want to call this an inverse head and shoulders? We can. Here, inverse head and shoulder, left shoulder, head formation, and right shoulder. Okay, let's look at, and what we really is, inherently we start to do this, I'm looking for some volatility. You guys know that? We want momentum to complete the move. I'm constantly on the hunt for volatility, right? You got it. I'm a bit cautious anytime. I'm just aware of the fact. Let's just put this way. I'm aware of any time that we are expressing a specific upward diagonal. Don't let it overreact in terms of this equation in play, in terms of already hitting a short button. Don't let it overreact if we're looking for a power move to the upside, okay? don't necessarily always hit the short button here, but you're going to have to ignore some people not to. Okay, you're going to have to ignore some authorities not to hit a short button here. Okay, you just are. We're going to look at, let me schedule into, let's go walk up one time frame on the, let's look in terms of the 5 minute as we see that breakout potential. And guys, roll slowly as you're working into. I don't care if you're literally, it's a literal quarter when you first start entering into high precision trades, right? As you determine your level of comfort in the market, you guys know 100 rounds. You start with it. I don't care if you start with a quarter. Learn to stack quarters into $1 before you stack dollars into thousands of dollars into tens or hundreds or millions of dollars, right? That's just the way that it goes. We clearly have this upward slanting, I mean, this goes without saying, right? I don't draw some of the things on the chart because it just goes without saying. You guys know that. But it's nonetheless relevant. The framework in play is the following. Let's look at the, we have to look at this lower time frame. This is the, this is what we're going to have to really get up, out, and over in terms of this. I just don't even want to say expanding leading diagonal. That is the worst. That's just that's the nail in the coffin, isn't it? 9 times out of 10 when we talk about it. Now, we trade Bitcoin frequently. The expanding leading diagonal. Don't call Prechter and the group, the international. I don't know, guys. I don't know who they are. The international Elliott wave theorists. Don't call them. I don't know I don't know what they're up to, guys. But looking at the framework here, expanding leading diagonal. It's supposed to crash to the downside. That's what they're going to tell you on a breakout. Be prepared for the fact that some momentum can break one of these to the upside. If we see one break, and we're seeing this this engage here, just mind yourself that we're dealing on a multi-time frame basis. You can tell I want this to break out to the upside. You can just tell. Elliott Wave and Prechter are going to say this is going to break to the downside. We are along a preceding level of resistance, trying to enforce it as support. I want to look at the 5 minute. Let's take a look at the composure or the composition of the specific momentum on the 5 minute and that needing to be reinforced to the upside, right? As we were to look at the level of engagement with a push, if you're still short on the 4 hourly cap line, kudos. Let's see how we roll. This is nice price action as we look at. Let's not forget Tesla. Well, let's look back over to Tesla, and in terms of the specifics, I want to get on the lower time frame as well and consider what Tesla's doing. Would love to see a fan formation here rather than just a trajectory to the upside, but we're going to be faced with just a similar issue here in terms of a breakout for a patterning. We just can't trade anything these days without really accurately assessing the curvature and handles and the opportunities that they provide, right? They're just all over the place. You just can't trade and not notice them. So again, we got the nice pickup there on the daily. Are we up and over? Just slightly up and over, trying to hold that cap line. Noted. Lower cap line, and I have a multi-time frame cap line. It's just a lot of lines on the chart. As we look at that 4 hourly pickup there, is nice, and nice to see us bulls trying to hold up and over that specific line. Let's go back to NVDA. Just she's crawling along, huh? She is crawling along. Let's see what we have. Don't tell me you did it again, huh? If you're doing it again in terms of the short on the upper pro line. Yes, right? Now we've gotten into a circumstance or a situation where we've had the flex of 0.2, 0.25, 0.3 on the upper pro line for NVIDIA. Some traders will sit here all day and hit and hit and hit and hit. Okay? Yeah, I know. But we want it to go up. We sure do. We're at a critical level in terms of that upper pro line. And this is an area where we don't have confirmation. Let's just agree, we do not have confirmation. We've got a lower time frame expressing bearish momentum. We have the 5 minute, which looks like it could be rounding. I'm going to note it looks like it could be rounding. It needs to double clutch and get up and out. You got that right. We have the hourly, which is looking strong to the upside. It's been nice, at least all morning. It's been nice after that recoup that hit onto the 20. We have let's look at, hold on one second. Let's look at the dynamics were off in terms of that. The visual down here, I'm like, hold on, that's not, let's look at this because that's not the price action. But it's relevant that we're up and over this preceding level of resistance, isn't it? Let's take a look at this on the lines real quickly and just see kind of where we're at. So we're at that breakout. It's a nice breakout level. We see this on lower time frames all the time, and we're always saying, what are you doing on breakout? We are stacking orders below. So on a slow dragging, a bit of a slow dragging Friday, let's look at that specific momentum. And Venus shouting out to JMac in the chats. What's up? VIP in the house. JMac may be trading. So looking at that express preceding level of resistance, or support rather, flip to the current resistance and trajecting up and out and over. What do we want to see? We'd like to see a clean candle set, right? We would just like to see a clean candle set. I'd like to know who's hitting the top pro line again. And you're just going to hear you're going to hear literally just, in the background, you're going to be able to see the pages in the book saying this goes to the downside, right? Now, what's the one caveat that we have with these? I'm going to say what's the one caveat, but it just doesn't look like I want to bring up the caveat or the exception here. It does not look like I want to bring up the exception. I'll bring it up with the understanding that it doesn't appear that right now we would want to bring up the exception. But let's bring this up. Now, anytime that you have a highly conformant bull pennant in the context of a leading expanding diagonal, pay attention, okay? Pay attention, because that is one pattern that we have seen construct itself out with some level of consistency up and above the expanding diagonal, this expanding diagonal framework, all right? So anytime that you have and we'd like to see a little bit better construction than just this, just to be real honest. We'd like to see a little bit better construction than just this framework here. Okay, so which is why I'd prefer not to necessarily just bring it up. But we're in a real tight spot. This is as tight as you're gonna get with a specific flat bottom support, trajectory back down, dipping into, let's see where we're at on your specific shorts on your upper pro line. Back into a 0.1 flash, bam, 0.12. Yeah, this is tight, guys. Now, we don't have that volatility, do we? We're along an important level, but we don't have the volatility necessarily. We like the strong hits and the exciting volatility. We like this move to happen, boom, down here. We want it down here in 2 seconds. Come on, NVIDIA. Making the traders just hang around and wonder if it's ever gonna pay. And how exciting to be a day trader. Come on, NVIDIA. Where's the market at, huh? Where is the market at? You got traders that are placing orders and sitting here, having time to look at their watch and wonder whether or not it's going to work out. Boy, Eddie Murphy, welcome to America. Come on, get with it. Having time to look at their watch to wonder whether or not their trade's going to work out. Give me a break. On the hottest commodity, on the hottest stock, on a key level of interaction, someone is taking crazy pills. I am so sorry. Think about it, guys. You have traders with time to check their timepiece out and, just dust off their Rolex while they look at the seconds and minutes go by to see whether or not their trade is going to engage. Come on, it's the market leading asset. Truth, huh? Absolute truth. So yes, level engaged again. But as you stare at that Timex Rolex, I don't care, guys. It's the whole point. You staring at your watch, wondering whether or not your trade is going to execute. Come on, huh? They're paying us for our time, huh? We may be on the clock. We don't know. I don't like to see it. I like to see that aggressive volatility. Boom, boom, boom. Anyway, let's get on into the differential now. I know this, huh? You're going to look back up the leading diagonal. Notice that we're not really that far down. We haven't broken a level of support. And this is, I hate to bring this up right now because the construction that you're looking at right now. What don't I want to bring up? Oh gosh, why do I not want to bring up? I will tell you the absolute fact, just for purposes of review on this. Hypercritical, you got it. It's Friday. Look at this in terms of the overall. Look at this. Now, what do we like? Ding, 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 ding. And the winner is boom. right? You got it. What we like is the level of resistance, pow, 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 into bam. Okay? That's what we like. Why don't I want to bring it up on this one? Because, man, you got like a straight vertical, near straight vertical line across the top. So if I'm structured out a little bit better on this on the right-hand side, and I've got a leading diagonal, pay attention, I've got a leading diagonal, and I'm boom, 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 right in here. We deal with these a lot, but that's where I like to enter for a short. Trade 100 of these, 200, 300 of these. VIP in the back, you know we've already seen this a million times. I'm joking about looking at your watch, but I do like aggressive price action. You know this. We like aggressive price action. We like volatility. Yeah. All right, let me go take the dog for a walk. We'll be back and we'll see whether or not come on, guys. It's the market. It's the number one market in the world, huh? If anything, I'm jealous over how great of a market it is. I want it to be a better market. Bottom line, put me in that category. I want it to be a better market, better than it is. Best market in the world. I want it to behave like that on a continual basis, without a doubt. So that requires some volatility so we can trade. So up and out over Tesla, looking at that breakout, looking at, we got a bit of a, what do we got? We got that, yeah. Yeah, we'll call it. In terms of the potential for a pickup along a bull pennant, it's a triangulation. I'd prefer a bull pennant to be a little bit more situated as such, with a clean line to the upside and a little bit tighter of a volatility expression. That's what I would prefer. Move to the upside. Again, I am complaining about lack of volatility. Quick, nice moves. Bam, 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 bam. That's just what pays. As you look at an asset and you determine, yes, I want to be a part of the volatility. Great. Then how do I capture the volatility? You're going to need volatility in whatever you trade. You're going to have volatility. You know, unless you're, guys, you go to your broker, you talk about your long-term annuity structure, you go do all that stuff. I'm not interested in that. I want things that are moving around continually, okay? And I want to figure out strategically how we can place based upon preceding number of decades, number of centuries if we can, literally, right? The right answers in the market, not the ones that are accommodating to me as we're on some journey to look at Tesla pick up on that bottom line support. Not that are accommodating towards my, guys, anything but a solid ability to perform in line with the way the market's performed for hundreds of years and for decades on end, and proficiently being a part of, and efficient, guys, just as professionally as we can, being involved in that context, both in terms of some legitimate complaints. Just, you know, we spend a lot of time, but in somewhat of a professional capacity. I think I mentioned that you guys were wearing Rolexes, so that's good. In terms of my complaint, what was the complaint? I want this thing to hit, not take minutes and minutes and minutes in terms of our top pro line, and then more minutes and minutes and minutes. Time to look at your watch and wonder if, well, I guess it's gonna. We want high flying action. We literally want the. You know, we don't want it extreme, okay? We don't want extreme volatility at all. I want you to know that. We do not want extreme, quote unquote, volatility. There's nothing extreme about what we want. We want consistent levels of dynamically expressed technical volatility. That's what we want. We want something to behave as if there are a lot of participants in the market. Yeah, we want a specific spread and a price action that's moving. We want to be a part of a fluent market, right? Someone shows up and speaks fluent language in a country, it's like, wow, you really speak such and such. Well, we want a fluent market that's expressing itself well between the buyers and the sellers and has activity and has functionality that we say, wow, look at that move. Not some paralytic, slow grinding, just market that literally you wonder if there's anyone executing on either side of the equation. We want to see them move. We need to see them move. It's assuring us that there are buyers and sellers in the market. It's a sign of a healthy market, right? And you say, well, price stability is also a sign of a healthy market. Potentially, to an extent, right? But I know for a fact you've got more orders stacked below and above on this thing than anybody wants to shake a stick at. Anybody wants to admit. You got more orders below I promise you, you have more orders stacked below on this at a discount than anyone wants to admit. While you're sitting, I'm just, again, I can hand out phone numbers if you want, if anyone wants to verify that. You've got more orders stacked below, above these specific price movements to where you're just sitting there grinding away on traders for, 30 minutes. Call it 30 minutes to make your trade work out. Like, come on. Like, this is the best market in existence. Yeah. What are we seeing a little bit of here? Differentiated blackjack, we'll call it. Differentiated blackjack, flat bottom support, return there too, up and over and out. It'll be a good opportunity for us to discuss any return to a preceding flat bottom support, right? And again, this level of resistance is just aim high, Air Force, right? That's part of the Air Force. You're going to have to get an F-35 to shoot that thing down, right? Potentially. Now, we are entering into a potential hot zone. If you, I do not want to bring that up again. I'm not going to bring up the 4 hourly again, right? The 4 hourly pro line. We're going to dismiss it, right? Let's dig into best time frame. Give me that hourly breakout. Give me that hourly breakout in terms of preceding level of resistance. Preceding level of resistance. Let's just go ahead and tag this in terms of the trade op we saw today from the 20 moving average boom to the upside. 2.42%. Nicely done. 2.42%. Nicely done. Looking at a breakout up and over, needed where? Up and over, 451.95. You see the flex right here. Yeah. Let's just go ahead and measure this. Let me see if I can go labels. Let me go pro on modern. And just so we can see a little bit of the flex along our top, fire nice level of activation on the hourly, right? It's the same story, different time frame, right? 0.1, 0.14, 0.15, 0.1. You got it, right? Tight moves. I know there's a lot going on. How many bites of the apple did you want at the I know, because you're getting into the challenge. It's a good challenge to evaluate. If you're looking at a 0.2 hit on your top pro line on the hourly, it's the next level of active consideration that you have to trade. I know we want to just fly to the upside. Traders are trading. You know this, right? Now, looking at the details, let's reinforce one thing specifically. Looking at the breakout of the 451.80, where are we at, guys? Let me get you the exact preceding wick high. 450, guys. If you're free and clear of 452, we're going in the right direction. I have a Bitcoin alert. Let's hear what she's got to say. 4 hour top pro line on Bitcoin. Rocking. Hold on. Ay. So Bitcoin doing a classic move, very classic move, bust to the downside on a triangulation and throwing back through and ripping up to the upside. We see this a lot, don't we? Without a doubt, we see that with frequency. Looking at a return to that top level resistance on the descending triangle. Now, 15-minute, difficult level of resistance, level of support. When's the last time in the world you want to go long on breakout? Typically, you'll find your pattern. It'll call us all fools for saying we shouldn't have traded it. But for us having said that, just be aware of the fact that this is typically a bearish pattern. Generally speaking, according to the New York Institute of Finance. Boring, right? You would think not at all, actually. Typically, generally a bearish pattern. You have the stats on it. Where would we like to be involved? Ideally on this pattern. We would like to be involved somewhere below. Ideally, for then the surprise of the overall and just clean the slate of all of the bears. You guys realize that typically bears are going to park themselves in this just permanently for shorts. They're getting ripped out after we decide to engage at a lower level. You understand we're on the right side of that equation like all the time. You got that straight? Other people are suffering. You know this. Look at your hourly time frame. Nice imposed double bottom. We typically like a double bottom, not as a part of a continuation and descending triangle. Typically, we'll always explore the notion that this could be a quote-unquote double bottom, but we don't like them in the context of a descending triangle. We're just not real big fans. If we're coming in from the upside instead of double bottom, it's a different story for us in terms of probabilities. Just works out to that extent. Nice hit into 4 hourly. Now here, 4 hourly pushed quite a bit. We agree? Heck of a 4 hourly stint from lower to upper, and we've got a target in play in terms of the completion to the top side. Taking a look at the top side band, Bollinger Band. Nice expression between said bands on the 4 hourly. We saw a compression in this zone. Look at this framework. Did not exactly tell the entire story here, did it? Let me see what we've got again. I think it's a re-engagement.
NVDA 1H crossing trend line.
That's NVIDIA. Let's take a look at NVIDIA. Let's see what she wants to rock and roll, what she wants to do. Hey, there we go. I'm happy to see it. If you got some shorts along the way, some flash trades, and worked on execution, and made some money before we got to this point, congratulations. If you made some money short at all, congratulations. If you treaded water and you're working on your tactic here, congratulations. You're working on making money between here and here, congratulations. Congratulations if you're working on that. Hey, do you make money short from here to here? You're going to get into some moves, you're going to be like, yeah, I actually made money short from here to here. People be like, no way. Oh yeah, definitely. Let's see what we got.
NVDA 1H crossing trend line.
All right, NVIDIA crossing trend line. Let's see what we have. And let's see. So we have a breakout. Nicely done. If you hit into shorts on the way up and you didn't make money, assess what you did. Assess what went on. I want you to explain, why didn't you make money? Okay? Well, if I lost money, where were your stops? How tight were they? How much did it hurt? There were some trades there, particularly on NVIDIA. We'll take a look at Bitcoin disregarding lower pro line 4 hourly and disregarding on the top level. Enforcing, but more relevance on the upper and lower band. We'll note such. We get a lot of dynamically accurate plays on Bitcoin. Interesting that we have this confluence with the specific cap line and the 20 moving average on the 4 hourly. Noted. To the extent that we're seeing this 4 hourly has been commanding in terms of that momentum. We just have to note such while such is the case, without a doubt. So that 8 hourly was that critical pickup on Bitcoin. If you have taken a look at that 8 hourly pickup, it was literally perfect. So we're seeing a conformance on the 8 hourly. Noted, the 8 hourly seems like a hot time frame right now. Yeah. In terms of a hit into the short level, the long played on the 8 hourly, and we're looking at an engagement on a short level of some regard on that 8 hourly again. Which time frame is hot? Which time frame is showing technical conformance is going to be something for you to evaluate. This was a perfect hit on that lower pro. We've had some adjustment dynamic recalculation so that we can essentially reacclimate and readjust to the price. Not repainting per se, because I don't want you to interact off this level, but it was 100% accurate, a dead on hit. And looking at the level of engagement on the 8 hourly, this level is engaging now. So not without a need for assessment in terms of, and we see this with Bitcoin, you have to pay enough attention to know which time frame's hot. True or false? You have to pay attention to know which time frame's hot. Which levels are playing on which time frame, whether it be a crossover, cross under, right? In terms of the moving average, in terms of that 20 moving average in the Bollinger Band. Look at these squeezes, pop, right? Bit of a squeeze, pop. Yeah, squeeze, decent move, low volatility. Squeeze, pop, right? Squeeze, pop. You got it, huh? Squeeze here, not much of a move, low volatility. All right? Squeeze, pop. You got it, okay? Nice moves. Interesting. Hold on. There we go. Now, so assessing the Your ability to trade, guys, just continue to work on it and continue to impress yourself slowly but surely. Steady wins a race. Let's see what we got here. Let's play along a little bit with the preceding flat top resistance. Let's see where we're at on that 50%, knocking into it. Okay, low to high on this structure. If you expand that on the 5 minute, you're seeing that cup and handle into that max probability zone. So your 8 hourly has you configured into a hit with on a confluent basis into that 50% max probability on this structuring into the 5 minute. Note such, nice confluence. Now, how would you be able to tell that? Well, we would go into the specifics on the specific crosshair. You'll see this on that 50% and you see this light up underneath, okay? It takes a lot of management in terms of your visuals. You go through a class on visual management. Really could, couldn't you? Interesting. Taking a look at momentum shifting to the upside. That momentum on the 8 hourly isn't always friendly, is she? Not at all. Your 4 hourly likes to get off. Your 8 hourly likes to get off. Your weekly should like to get off as well in terms of just clearly bearish on the weekly. Just delayed actions as either the indicator comes into conformance with the price or the price comes into conformance with the indicator, right? So nice move up, out, and over on Bitcoin. Nice to see that. Not surprised to see a symmetrical triangulation. This is a front run for the weekend. Let's count this on Bitcoin. We see moves like this all weekend long, almost every weekend. What does that mean? Don't we see this type of a move, a bust to the downside? You got it right. A bust to the downside, busted pattern. We'll go on the lines. Busted pattern to the downside, and then a throwback and recoup bust number 2. You got it. This is the weekend on Friday. We see this all the time. This is just par for the course for Bitcoin on a weekend. Typical trade, weekend style trading. Now, the bottoming formation, if we're going to look at this as a bottoming formation and the potential for a breakout up and over, she may give it to us if we want it. Look at this in terms of the $28,013 up and over the preceding. We'd essentially be looking at, I mean, this is a collapsed handle here, right? Cupature is nice. Failure to get the specific handle, that's a collapsed handle, right? So we'd be looking at more of a, we could, try and, with this hitch in at this level, designate a bit of a triangulation. We could try that in terms of a potential for a measured move here and above. The required breakout would be at that level. Not crazy about that triangulation, but that would technically conform. If you've seen enough patterns, you would say, well, that's probably technically within the parameters of what we would see in the book. Yeah, probably so. But nice to see some action, a little bit of sporadic action on the triangulation rather than just wrapping that up into the weekend trading. We agree? Breakout Clutch City needs to activate in terms of we need some powerhouse moves on any kind of a, when I say double clutch in terms of momentum, let's say on the 5 minute for NVDA, we need this to bam, reignite back to the upside. Oh boy. Don't say it. No one say it. Just let's do this. Come on, NVIDIA, right? I just don't even want to say it. Now, we have the interpretation of said channel framework to be what? To be part of an internal structure. What do we know on breakout? Now, it's a two-tiered breakout, but what do we know? As a fact, what do we know? Where are the orders stacked? You got it. Every single time on a breakout to the upside. Now, we have this included pattern, which makes this a bit fuzzy because we're up over the preceding lateral pivot as well, right? So everyone's forgotten about this level. No, there are orders at that level. You got it. So this is a good trade day, huh? Now, assess as well if you had a sweet pickup on the hourly. If you had a sweet pickup on the hourly and you're up 2.5%, 3% on a video, hypothetically speaking, 2.88% hypothetically, of course. We're just going to take everything we can from equities and apply it to our Bitcoin trades. You got it right. You know this. Now, what I'm going to say is If you chewed through profits, all of your profits, hammering into flash trades at this level, then you don't have the equation down. On a hypothetical sense, if you were to have chewed through profits here, then designate the importance of said active pattern on, let's say, the hourly. That's also shared componentry with your other time frames in terms of the potential move to the upside here. Let me go pro here. There we go, pro. The issue being, as you're looking at your potential move to the upside, that 10% move, 5%, the 472.97 need to hold up and above this level. This would be a heck of a day for NVIDIA. I think we can concur. What's holding us back? Don't even say it. Don't even say what's holding us back. Ouch. We have to talk about it. It's in the market. True? You got it. Inverse head and shoulders is pretty clear, isn't it? So this is a stall out provision on the trade day with a breakout of a lateral preceding flat top. Sometimes we don't have these. It's not always required. What were we just looking at? It looks bull. Look at this. Hold on. Where are you at? Look at that. That's bull, huh? That's bull. That looks bullish, huh? No? Come on. Rising wedge. You got to throw a rising wedge in there? Come on. Which we wouldn't have if we had a straight line down and some consolidation, a straight line up, and boom, boom. Yeah, we wouldn't. But we had to mess around in this area. So, the challenge is presented to you on a Friday. Yes, indeed. What were we flirting with here? This specific breakout level, yes, and where are we at? Let's see, what's determinative? Yeah, that top band, bam, on the hourly noted. So we'd like to set a candle. Here we go. Market's doing this to us today, right? 45 minutes to the set of a new candle. We'd like to set a candle up and over that line. So we'll hunt that line down on a lower time frame, see if we are close to, and indeed we are. Let's see what we can do with a 15-minute candle. Let's see if the 15-minute candle will give us grounds on a reset now. On a reset up and over, preceding level of resistance. Let's see how this 15-minute does, and we can apply it to those higher time frames. In terms of a candle set to be reinforced by the bulls up and over a level of resistance, let's watch this 15-minute play out and the application to a higher time frame. What would we have preferred? We would have really liked to have seen the breakout level on this said higher time frame, right? To be exactly, we would love to have seen it be exactly an open right over that level of preceding resistance, wouldn't we? And the bulls to have an opportunity to just ignite with some just straight rocket fuel ignition, engagement and momentum, boom, to the upside. A real clean candle set would be preferred right over a preceding level of resistance to allow the traders to all continually say in agreement that, that we've got a clear level to reinforce here. Not necessarily that we're coming back down to it. Well, I guess we're going to reinforce that at this level. Or not necessarily, well, I guess we could also reinforce at this level. Okay. Yeah? Capiche. We got it. That means understand. Yes, indeed. So, that's the kind of pickup dynamic breakout that would be ideal for us to reinforce. You got it. Without a doubt. Bitcoin pushing up and over that 50% to that golden pocket. Nicely done. Nicely done. That 8-hour pushing on that top row line. Let's just see a cap line engage. Where are we at on cap lines? Any cap lines engaging? We're going to be pushing with what would be, if anything, would be an ideal entry for a short along the top of a descending triangle. Are they tricky? They can be. True? Yes. I will always say, do not, we have a joke, what do you want to do all day long? Let's trade breakouts of descending triangles, right? Clearly. With that said, the dynamic in play is typically we'll see these bust in terms of a breakout to the upside. We'll see them bust to the downside. Caveat being, we are on the 200 weekly moving average. True? Yes. Level of engagement? Yes. What are we over? Bullish? What are we under? Bearish. This is a line, a dividing line in the sand you don't want to miss out on. Typically speaking, over the preceding number of months, it's a pleasure to be streaming with you because this is a determinative line. Is it nice and easy and it resolves itself within 10 or 20 minutes? No problem, or 10 or 20 hours every time? Hey, no big deal. Easy level to trade. That's not what I'm saying. What I'm saying, well, this thing will let me do this. Hold on. What is this doing? Huh? Just trying to get it to select everything. What is it doing? Hold on. This is all messed up. There we go. Can you select it's not going to select anything. Come on. I'm trying to give you guys a little bit of a clearer picture. Trading view, complaint box, engaged. Now, over the 200 weekly moving average is bullish. Under the 200 weekly moving average is bearish. There are traders who are fighting for position on this line with a carry trade, with the understanding that you may have a decision to make or re-engage in said level, and said decision could push you to fight for this line for a week, almost 2 weeks, 12 days. Arguably, pardon me, we have been fighting for this line for, don't tell me this is 53 days. Let's take a look at it. 53 days. Now, we have engaged in this line precedingly. Okay? This is 68 days. You got a heck of a trade here. You better believe it. You engaged here, got a heck of a trade, over or under. You engaged here and got a heck of a trade. You engaged here and the word was out. True or false? It was common knowledge. We're going to go long over, short under, and just be prepared. These are some King Kong profits. Yep, the word was out. One, really a rehit near, stress out these shorts, right? Stress out those bears. That's a long time to wait on that short, but look at it. Nicely done. 82 days. Working on 3 months. So as you look at this level, it just has the capacity to continually remind you after the fact that, God, would have been nice to short or long, over or under that level. You've been rewarded under this level. Here, even recently, with a near direct hit. That's not bad, guys. 10% move in 12 days, that's not bad. It's a carry trade. It's not bad. We see some good move. We saw 6% on Tesla yesterday, right? Based upon the entire history of Bitcoin, please note such. Based upon the entire history of Bitcoin, this is a level that you want to be affiliated with, even understanding the potential for long, bullish over, and bearish under. We've had some good trades, bearish under. Some traders will look back at the history of this and just say, no, it's long. You want to be long over that. It doesn't matter about the short. We'll see some short trades here. And this is typically speaking, it is a critical level of concern. Look at the level. Look at the line. This is the line. You know, all attractive, fanciful charts of, guys, origami charts. You don't need it. This is the line for Bitcoin, really. Yes, indeed. So simplified, we concur. So we're at that level. We have to note such that this is a desirable level to be at for purposes of gauging your interaction, long or short. Yeah? Great time to discuss that. Great time to discuss it. It's engaged. Now, your frequency analytic here is different, right? In terms of the expression of this level, you've had some trades for maybe a few hours, trades for maybe a few days, right? A few hours, then a few that have gone for a few days, and you may have one that'll carry on for a much longer duration than that. Yes. So you see the frequency discussion. Frequency meaning that duration or the repetitive nature, the frequency, right, of not a pitch, right, but the frequency, the number of times, or the number of, in this instance, it would be seconds, minutes, hours, days, weeks, months, or potentially years that you're going to carry, that duration of your trade, the frequency of your trades, in terms of that duration is going to adjust. We like the fact we're on a critical level of consideration on Bitcoin. It's nice. And you'll see some nice hits. Boom. Nice hit to the downside. Perfectly structured. Yeah. Great level of engagement here to the downside. This level trades. Nice re-hit. Boom. So keep this actively on your radar. You can look up heat map 200 weekly. Heat map 200 weekly. There's probably some other, I'll publish something for you guys if you need it. That heat map 200 weekly. We're just engaging on that level. That's the number one level on Bitcoin. Along with the weekly 20 moving average. We concur, right? What engaged down here? The 20 moving average on the monthly. Let's take a look at that on the, let's see what we have on the monthly. Yeah, we've been pushing over the monthly. The monthly is actually riding downward. So that's noteworthy. As we've been trying to engage on this, you can kind of see a bull flag making its way out with a curl-in feature. Yeah. Bit of a complication in terms of a constriction at this level. Slight concentration in terms of the price action being abbreviated at that top level, which is indicative of a bit of a rising wedge formation. So that specific 20 moving average on the monthly and the weekly, highly relevant. Weekly in line with that 200 weekly moving average, of course. Long over, short under. Yeah, it's engaged right now for some profit to the downside. Good challenge in the market. So when you see that we overperform just a touch in terms of the 50% to the upside, engaging on that 200 weekly, nicely done, right? Golden pockets everywhere today, huh? Golden pockets everywhere. NVDA. All right, so we're seeing, see where we're at. And so we did not get the move back down to preceding level of resistance. And it's a slow grind up. Come on, NVIDIA. Where are we at? I don't know if it'll allow me to do this. It will. Look at this. Nicely done. For the complaints we have against TradingView, she sure can make up for it sometimes. So inverse head and shoulder breakout. Let's go ahead and measure some targets to the upside, shall we? Hey, congratulations to everyone trading. If you are batting 1,000 and you are already in the Pro Hall of Fame, congratulations. If, however, you are still hitting doubles and triples, and dang it, you got a strike. Hey, swung too hard. No big deal. You hit how many home runs today? Fantastic. As long as you're hitting home runs, if you're going to strike out every now and then, it's okay. It's all right. We're going to learn how to read the stitches on the ball a little bit better and see if we can get more home runs, turn some of the strikeouts into home runs, right? Pro ball player can do it. It's just a matter of purposing yourself to do that. We know preceding level of resistance is the worst comment in the world, huh? But I did, encourage us to look at this level when we were down and out this morning. So nice move to the upside. Understand what's loaded with orders. You got it. Level of resistance. You got it. Preceding level of resistance. We got a little differentiation there, but we are up and out on, nicely done, on NVIDIA. 1.52%. Volatility, a little bit lackluster, but let's measure that from the hourly so we can see, and we want to compare it to, we really do. We want to compare it to Bitcoin, our mainstay. What can we learn from? What can we gain from NVIDIA, from Tesla, right? Musk. What can we learn from these guys? The 3.13% move to the upside from the point of engagement this morning in 3 hours, 2.5 hours. Hiya. We want that in a couple minutes, don't we? Yes, there are ways to throttle up your trades, which you all know. Become consistent before you touch that nitrous button in the Fast and Furious car, right? You got the nitrous button there. You got the increased leverage. You got all kinds of different ways of making this a little bit more exciting of a journey. Just make sure that you have mastered all the skills, yeah? Work on those strikeouts. And, Yeah, we focus on those home runs. Level of resistance incoming, you got it. What would we prefer to do, right? Now this is the low to break out on the, we've done this before. Recently we've done this on the Cupature and handle. Yes, we have. What traded? Do you remember, did the inverse head and shoulders of the Cupature and handle trade on the last time we were forced to do this? Do you remember? It was the cup and handle. Traded to targets better than the inverse head and shoulders. That's just a fact. Indeed. Let's take a look at the dynamics. Let's schedule into and just reckon upon this 15-minute time frame on the lines. Not overly conservative, but somewhat. Let's go ahead and make sure that we're drawn appropriately, connecting the shoulders here, the pivot between the shoulders on said neckline. Let's go ahead, identify such. Let's measure from the specific head formation along the bottom, bam, to straight up, okay, to a straight up feature here, bam. That amplitude we're going to measure from the point of breakout, which is right in this zone. There you go. Okay. So these are going to be active targets. Active targets with the understanding that you've got a whole world of hurt in the form of bears lined up along this level of resistance. True? Yes. Indeed. Now they've had it at it. If you're envious of the bears this morning, they've had some flash trades, right? They've had to know when to let go. Yeah, absolutely, on that 4 hourly. But as we see this level of resistance incoming, yeah, that's the way she's built this morning, isn't it? In terms of NVDA, nicely done. Rising wedge, expanding formation. We see quite a few of these. It's nice. It's a nice dynamic in play because the bulls are being asked to push up and above. Not everybody's going to catch this, but bulls are being asked to push up and above the level of resistance. And the best that we can say is what? What's the best we can say here? Well, I guess, and this is part of every, not every, a majority of the ones we've traded recently will say this, the Cupature and handle here, right? Can't we just establish this as a Cupature feature and a handle here and just raise even potentially our targets to the upside? What if this is our Cupature? We're going to look at that Cupature amplitude and really raise this up to here. We're going to get some higher targets if and when, to the extent we can get, instead of the 23.6 on that inverse head and shoulders, amplitude move to the point of breakout. Well, if this is a Cupature and a handle and we're breaking out here, danger. Trading a breakout over a rising wedge, yes. Do we prefer cup and handles to be like this? Negative.
Blackjack neon 4 hour.
All right. Testing blackjack on 4 hourly. We just hit to the upside, up and over that 200 weekly. True? You got it. Now, this is ideal on NVIDIA. And I know you guys are busy, you're trading, you got like 14 things going on, and all of a sudden you realize, like, man, yeah, all those movies that we've seen about people just screaming right and screaming left and pushing this and pushing that and everything else. Yeah, it's a lot going on, right? Some mornings, and most of the mornings this week, I've been up hammering at the microphone. You know this. Sometimes, like, slow down, could you repeat that? There's no time to repeat it, we're on to something else. Cupature, handle, up and over, breakout with more aggressive targets to the upside. So we have confirmation? No. Do we have differentiated patterning in play? Absolutely. We note such for times when everything is par excellence and agreement, full confirmation, when there's no discussion to be had. Right on. Tesla picking up. Glad to see Tesla rocking and rolling. What's up, Tesla? Boom. Nicely done. As a matter of fact, you had to decide you didn't want this trade. True or false? If you saw this, you had to decide you didn't want the trade. Nicely done. Boom. Nicely done, Tesla. Now, we note the Cupature and handle for purposes of, guys, the correlative between. We're going to note this. You got your own trade ops, right? This is in terms of a concurrent discussion, as we look at the correlatives, we're going to notice this. You got it. That's a nice move. Let's look real quickly at the 50% up and over. Oh, tell me, at the golden pocket again. Add a golden pocket again. Nice move. Let's measure this. But you saw that recovery up into near green. Way to go, Tesla. I'm just going to measure the bottom of the top, 1.89, 1.9. So we're looking at a 0.9, about a 1% move up from breakout. Let's see where we're at. There you go, about 1.1%. Yeah, 1.08% right now. That's good, 1.16 maybe. Going to depend upon whether or not you're on the candles or the actual lines. So nicely done. And you have to say, now that's an interesting blackjack. Descending triangle, flat bottom support, descending line of resistance. Yeah, we will consider such to be a recovery to a flat bottom support with a single pass through. Boom. Sweet. Nicely done. Now, the question on, you got it, the question on Tesla. You got a breakout of, call it the 262. Now, everything decides to get real busy and real green on a Friday. Man, why the sigh? Because the Fridays have been real touchy in the afternoons the last couple of weeks with the quote-unquote syndrome of decreased guys' liquidity, etc. That volume issue, and yeah, Tesla was the one that bit the hand pretty hard on that momentum. The ghost move. It ghosted into a move. We're used to Bitcoin doing that, but Tesla. Preceding resistance, flip as support, 1 hourly time frame, capiche. Looking at the, these are my volatility blocks, by the way. The volatility blocks are designed to give a bit of a structure into some potential targets or areas that we're looking to for order engagement or target for movement based upon the volatilities, based upon the movement right now, the volatility. It's in an exploratory mode, I'll just tell you that, but it's nice to see them lined up along such, right? So this 262 flat is going to be something we're going to set an alarm on. Let's add an alert. Call me. Let me know when you bust it to the upside. Yes. And taking a look at the framework, I want to shout out to everybody getting an early start on the weekend. Let's rock it. You got it. This level, isn't it nice to see Tesla and NVDA rebound up through today? We don't want to see, guys, we don't want to see this move just completely capitulate. So next on the script is, you got it, we got to see that 262 mark enforced. You betcha. We got to see that enforced. Blackjack, call it blackjack, guys. You know that. Double bottom, single pass through, we'll call it. Nicely done. And let me see where we're at on, so what was our key focal today? We were a quarter off. We were literally 25 cents off. We measured such, just measured 25 cents off. 3% on Tesla. Granted, yes, you're off by 0.25 cents. So nice pickup on Tesla noted. Now daily, where are you at? I know the flash traders are like this. Just I see how this works now. Maybe seeing how this works now. Are you sure you see maybe how this works with a 0.2% move? You execute one of these trades, execute then 5 of these trades. Start to work on levels of proficiency as you focus on your assets of choice and your screens. You're going to become more proficient at this. I like the idea of the big screaming room, huh? Everybody just come on in. Let's go. HQ is crypto chaos, huh? Absolute crypto chaos. You don't want to go over there. Everybody, the neighbors, like, you don't want to go over there. I'm not sure what they're doing. It's bad. There's a, anyway, you can only imagine, huh? It'd be nice. Now, this is a challenge anytime that you see something like this with a drop off on a blackjack, which we're just going to call it. I've got an indicator scripted for this in terms of blackjack. Shout out to Switzerland. Hopefully all is well. Big Lucas out in Switzerland. What's up? Hope everything's well. That blackjack indicator is going to be nice. But yeah, blackjack caught this move. Bam. Below a flat bottom support. So a blackjack up, out, and over. We'd like to see this run continue to run to the upside. That double bottom blackjack. That double bottom. Let's just see this. I have alerts set on some assets, not on others for blackjack. This is a blackjack alertable moment. The 2-1 double bottom single pass through. You got it. 2-1. The 2, the 1. Blackjack 21. Boom, boom. You got it. There is a very good empirical basis for me referring to blackjack. Okay? There just is. And if you look at the performance numbers on a descending triangle, it is beyond legitimized in terms of the empirical data for the most robust set of empirical data that exists on the markets that we are privy to publicly, period, okay? A very lackadaisical term and an extremely important expression that's technically founded. I'm going to raise my target up to this 3-minute level and that 263.71, okay? That 263.71 is going to gain that redraw from my standpoint. Please note such. Looking at a level of support reinforced and some real need to get up and out on this. We feel like we've got a bit of a limited time frame, don't we? On Friday, yeah. We got 4 hours left in the trade day. And we started on some really some wild jobs numbers. Yeah, so those wild jobs numbers just really deflated the market on the get-go. And then since then we have, look at that. Boom. There you go. That's what we need to see. Now on the NASDAQ, now that we have been able to reinforce, I don't like the diamond here. You guys, I think you'll agree we don't like the diamond. What do we like? Let's go ahead and just call this a specific. We have to stretch it out, right? Look at this. We have to expand this. Well, we can call that a cup and handle, bottoming formation, right? With the caveat that we do have a bit of a level of resistance carry up, boom, to an active level of engagement. So that's going to be the crux. Understand there are a few patterns that we trade, a few that aren't compromised by anything, right? There are a few that are just free and clear. This is a power move. It's nice to see this. Oh, the ones who showed up for the Armageddon, huh? You know, the ones who show up for the Armageddon, the ones who preach it all day long on TV, get you scared to do anything that has to do with your entering into a long position. They're going to miss the upside, right? They're going to miss the upside. Nice to be peppering in some shorts along the way and working on those levels of engagement, those flash trades. You guys agree? Nice to be hitting into some highly proficient areas, some tactical engagements. Work on that skill set. That trades. Boom, boom. Yeah? Nice flash trades. Again, we want that action. Put us in the game, coach. Put us in the game. And I want to hit that fastball. I want to see what the pitcher's got. Let's see what we got. It's 120 miles an hour. Let's throw it. Come on. I'm not going to be able to hit it unless I get up there and work on this. Yeah? So nice engagement. Highly precise daily time frame, right? 0.26, 0.28. This push below, right on the daily, down into what? Down into the 4-hourly cap line. In fact, that box, the volatility box is shading. Again, you see what the volatility box is doing right now? Based upon the preceding close and the volatility expressed now, it's highlighting these areas of the cap line and the specific 20 moving average as a safeguard on the 4-hourly. Just so you understand, the volatility blocks are drawing your attention to the 20 moving average and the cap line as an area where orders are currently being attracted. Call them order blocks if you will, but these are volatility. I call it a flex grid, but we'll call it we'll just call it volatility blocks, okay? Because it's based upon, it's an actively dynamic measurement based upon the preceding close, and where we are now, we're down. So it's going to highlight some areas of interest below that you might not otherwise look at or pay much regard to. You see that? It's instrumental right now in identifying the cap line and the 20 moving average below. areas where there are orders waiting. We'll agree on the 4 hourly? You betcha. Let's look at the daily. Daily is identifying, and we'll just say on the daily, identifying this lower portion and rung along that level of support. Preceding structure, we'll do this. Interesting, huh? Preceding resistance. Isn't that interesting? Preceding resistance being identified along with that level of support across this level, along with kind of the red zone. We'll work on this coding, but red zone in line with, we could say this cap line, but really what's drawing attention to that preceding pivot. Would you naturally focus on that irrespective? Irrespectively of what you're looking at? Maybe not. Can we do this? That's a real extended, we'll say no to that, okay? Anytime I really start extending a rising wedge, I want to pay attention to that. So preceding pivot in play, noted in play, along with potential cap line in that zone. So really some visual structuring in play. Interesting. This is on Tesla, right? Tesla 4 hourly. Let's take a look at, let me see on the 5 minute. Levels of engagement. Nice move. We measured this move to the upside. Now, where are my targets to the upside on Tesla? We may have dismissed them. And that's okay. We can redraw quickly to the extent needed. Let's see, 3 minute, 5 minute, 15 minute. Let me see where we're at on, we'll just do this real quickly again and see where we're at. Do a quick draw on the extensions. Remember, you want your targets to the upside. Click 1, click 2, and over. So into that golden pocket, yet again, we're seeing that reinforced, aren't we, continually? Without a doubt. What is the parallel carry up right now from the level of support? You got it. Attracting attention all through this level. Yep, you got it. Every single time you break out, pay attention to this. It's just nice to have recouped that bottom line pre-existing level of support. Flipped. Nicely done. Nicely done. Let me go back to the candles on this level. Daily engaging, you got it. It's good that we talk about it and we show the levels in play, without a doubt. Work on the profit equation as the pricing dynamics work on you, right? Is it going to be intuitive and just right out of the bat something you're going to immediately acclimate to? No. If it were, it'd be easy enough. Everyone would be doing it. There wouldn't be any stigma towards knowing how to do it, right? That hourly drop on Tesla, pushing back up over that specific 20 moving average would be the key. Would be the key focal. And we'll just note again the specific pickup on Tesla within conformance, within threshold to that cap line 4 hourly. 4 hourly. Level of resistance on NVDA at the level of resistance, true to form. You got it. So we're seeing good price action today. These are good days. Every day is a good day, huh? Almost every day is a good day, huh? So we have good days, we have great days. How about that? That'll work. Nice to see this bell pattern formation from this microstructure which we identified here. True or false? You got it, huh? We love seeing this. Resistance, support, resistance, down and through, and boom, to the upside. We like that. We like that a lot. And we're being invited to just really take a look at this 20 moving average hit on Tesla. That daily. You got it. It's a nice hit, isn't it? Nice trade. You have to say it's a relatively nice trade, 0.3, 0.4%. We'll see where exactly she decides to go. Looking at the lower time frames we identified. The parallel channel on the 3 minute time frame. Orders clearly set at that level. Are they required to get to this level? No. Is it an expression that every trader worth their salt is looking at? Yes. What would we look at in terms of, and here I go. I want to dig into the lower time frames, right? Note, when I want to dig into the lower time frames, make a note of such. When you find yourself doing that, you're on a different level of a hunt. Will you agree? Yes. You're on a different level of a hunt when you're digging into a lower time frame. Okay? Don't lose the larger component pieces of the price action. You'll end up with a target here on the 32nd and be hammering at it from here the whole time, guys. Or from, you'll get disoriented. So stay in check with your larger time frames. And this would mean a rehit nearly at or above that, back into that daily. True? Yes. So we see price reacting back into this componentry here on this specific flat top descending. Let's take a look at the price action in play. You actually have this. Go to the, you have got this in play without a doubt. You say, well, I'm going to call it a flag. Call it a flag if you want to. I'm going to look for volatility. We'll notice flags when we have them, but I just want to notice the conformance between the top line resistance here and that expanding there with level of support across the bottom, right? You got it. So, and why is that important to me? Because there's a volatility equation, not only in terms of getting to that level of resistance, also in terms of that level of support. So I'm not always just looking straight up on these patterns. I'm also considering, you got it, the level of entry below, and that's the one key advantage you get from, instead of just always trading a bull flag, right? And we've got a differentiated patterning here on the bottom formation, etc., right? Call it a rough conformance with bull flag, yeah. But as you look at that classic expansion bell pattern formation, will you, as you look at that daily, use that as a reason to be involved or not on a rehit into the 20 moving average? It's a consideration, without a doubt. It's a consideration. The bullish nature of this pattern dynamic is something to be essentially regarded. The microstructuring of it is going to be something that you're going to want to regard, obviously, appropriately. I don't want to shift talk around it, but we see enough micro patternings here and along the way. Would you choose to just trade this on the micro rather than the daily 20 moving average? Likely not. So would this be part of your decision-making process on a short? Sure. As a matter of instead of being a part of the price action to the upside, and this is a real hit and hammer. We've seen the 4-hourly do this and the daily do this, to where pushes up and above have results. And this is a tight, this is real tight right now. When you're talking about 0.1, 0.2%, this is a tight, kind of some stiff competition, getting into a 0.1 flex point, more than that, about a 0.1% flex on that move. That's tight, guys. Let's take a look at the lower time frame. Where are we at? Anywhere have a flat top on a line or otherwise. It looks like that 5-minute could have nearly a flat top. Let's see what we have on the 15 pushing. Okay. Let's see what we're looking at. All right. Cap line engaging on the, attempting to engage on that 30. See, we're into the 30-second. This is just, it's easy to lose your bearing once you're really tightly into a lower time frame. If you sat on the daily, nice rehit. Note 2 rehits, or 2 hits at least on the daily. Let's note 2 hits occurred on the 2 hits on the preceding 4-hourly that we were looking at, engaged upon. Let's note 2 hits on this daily, engaged upon. And if we're going to get into some sort of a target dynamic, is going to be the one issue, aside from lack of performance on a basis of, and now we've pushed into a broadening top, potential diamond, but a broadening top. I just don't like to be over-reliant, and you hear me say this all the time, nearly every day, multiple times every day, is I don't like to be over-reliant on any type of a micro pattern. I just don't. And that means really a 30-second, a 1 minute structure it has the potential to be catchier beyond what you're looking for. It's going to be the exceptional, you all trade enough, you'll know, it's going to be the exceptional, what will we say? The exceptional 3 and 10? 3 and 10 potentially. Times where there's enough momentum to just blast through and absolutely complete and make the lower time frame look like a 100% champion to trade on all the time. I just really, when we see the micro, now this is not as micro here. Okay, this is more filled out. This is on a lower time frame, but it's not as much of a micro structure. You'll see repeatedly in New York Institute of Finance, how long did something take to formulate? This has taken here an hour and 7 minutes, whereas this pattern here may have taken a matter of minutes, right, on a 30-second or a minute time frame. So we're just going to note the restrictive nature of really what level of reliability do we have on a pattern which is just really just the last few minutes of price action to be really determinative in terms of providing a predictive value. Is the bottom line. We'll leave it at that. Just remind yourselves that I continually bring up when we're on a lower time frame. Okay, and always if you're on a micro pattern of expansion, we do have a target to the upside technical noted on the 30-second time frame. So note on a 30-second time frame, we do have a micro patterning in play that would give us a specific target to the upside. So we're going to note that. Okay, and now we're seeing a bit of a move on the 20 of the daily. Let's just note such 0.4% move. We saw a bit of a flex. What was the flex up and over with that micro bell that did pop us up and over? And we'll note that we had an upside target that didn't get hit or hasn't gotten hit yet with a reinforcement of that level. Let's just note such 23 cents. Okay, so we pushed up and over 23 cents. This is just a danger. We just need to I may just actually put a warning on the screen, literally if we're on a lower time frame. I literally may just do it, okay? I may program it to where we have it written out in scripted warning. I'm gonna do that for next week, just so we have it. Whenever we're looking at it, I want you to see, yes, we have a lower micro time frame. You hear me hesitate every time I'm about to go into it. You hear me hesitate every time before I'm about to go into it? Yep, it's just a fact. We have the momentums in play here. And the reason is because particularly you don't want to necessarily release. I see a lot of headaches in the market. I'll just say this, you can let me know your own experience, but when people release a big position based on a micro zoomed level, they're on the 5-second time frame and they're releasing and make a decision for the next day or two or whatever it may be, releasing or engaging in a large position based on a movement and I had a bull flag on the 15-second. Well, that's a bad idea, typically. So when I get to that point every day, and it's almost without fail, every time I get into the lower time frame, you hear me become skeptical, shift in my mood. Every time I go into it, I doubt the validity of going into it and really providing any kind of a real non-skeptical level of predictable, consistent engagement. You got it. You hear it every time every time I go into it in a lower time frame. It's not that we can't operate in a lower time frame. You've probably trained on these lower time frames, yes, in terms of your 100 rounds. So you're probably very proficient in terms of a quick take. You just need volatility. You need the volatility on these lower time frames to be able to really operate for profit. If it'll give us the volatility and same probabilities, we're fine with it. But it's just it can be dangerous to be drawn. I feel like we're consistently drawn into them. It's like we don't have an answer. We're good at finding answers, guys. You know that. We're going to find the right answers. And what is it? We have the answers laid out between the 3-minute. Not down there. We have the answers laid out between let me switch this one to the 3-minute. Between the 3-minute, the 5-minute, the 15, the hourly, the 4-hourly, the daily, the weekly, and the monthly. We have the answers scripted out. And then what happens? Of the entire set that we're given, of the whole set that we're given, all this information, it doesn't give us an answer. Aha. So what's it doing? It's luring me and you into the lower time frame. Yes, it is. It's luring us into the lower time frame. To what? To make less accurate decisions. Typically, they're catchy. Okay? Now, you may be so proficient on the lower time frame, you don't even need a higher time frame. Perfect. But I would tell you, when you have all of the world scripted out from the nice rebound here on this move, on the 3 minute, we can see it just fine. Now we see a bell now on the 3 minute. Now on the 3 minute, it's crafted into something. Okay, that's fine. Now we have what we found on the 30-second. Now it's on the 3 minute. Great. Can we see it? What do we have on the 5 minute? A little bit more predictable. But when we're looking at 1, 2, 3, 4, 5, 6, 7, 8 time frames, all this information and I don't have a good answer, it's luring me into the lower time frame to try and project what we really need to do on these macro time frames. It's okay. We can do it, but I feel that bait every time, which is why I'm hesitant every time. It's when we're not being given clear answers here. It's not that the answer's here, we're just not seeing it, etc. No, it's baiting us. I'm telling you guys, we look at charts enough, you're going to know what your answers are in the market. Come on. We're going to know. We got all this information up in front of us, and all of a sudden we just don't have the answer, and it wants to flip around on a 10-second time frame. Some of you may be more proficient than could possibly be dreamed of on a 5-second time frame. Others of you may approach it with a reasonable degree of caution. Yeah? Now, the crux. Now let's look. How's that daily? What'd you get into? 0.2, 0.3? And it's just a different story. You have to admit, it's a different story if we're sitting on the daily or if we're sitting on the 4-hourly and we're trading and we ignore all the noise. Because I'll tell you, as a matter of fact, let's just discuss it. As a matter of fact, what do we have on the 1-second time frame? We have got a lot of noise. Yeah, we have a ton of noise. Huh? Look at this. Huh? Now, let's get on this 1-second time frame. A lot more noise, huh? A lot more noise. Then, now what's this amplitude? Let's just measure the amplitude here. How are we doing? 0.37, huh? 0.37 works. How reliable do you think this lower time frame is? What do we have here? Oh, it should be easy. We should know exactly where we're going. We should go up. Right? Reinforceable level of resistance. We got an expansion here. Oh yeah, we should be going to the upside here. Let's see what we got. Let's see how far she wants to push down through a support level. And now she's making me want to dig into like the point. We have like a half a second. Any kind of like a half a second would be fantastic. But yeah, this is easy stuff. Yeah, we're going up here. This is the 1 second. This is easy stuff, right? You guys all agree, right? We're going up. We're on the 1 second. Okay, we're proving a point right now. We're going to march through the 1 second here just for a moment and just prove how consistent and reliable and trading is just a breeze on the 1 second time frame. Nothing but accurate information. Yeah? Nothing but high probability. I mean, without a doubt, high probability pattern identification and consistency. Especially your momentum in the bottom. I mean, it's flying to bull to bear to bull to bear. It's this level of technical proficiency. Here we go. Now we happen to go. We'll see. We're going to trust the first bust or not? Now we get into some questions, right? This is actually good for you in terms of trading. Why? Because the reason I said, well, it's clear, of course, we're going up. Because on the whole, 72% of the time, I'm going to get to this level of resistance, right? The question is, can I trust? You got it. And now you can say, well, we also have a bull flag. Well, watch it impress the 1 second as soon as I call it out and I become negative on it. Yes, we have a nice bull flag on the, and I like the bull flag less than I do the specific, as we look at this, less than I do the specific volatility expansion. Why? Because my expectations on the volatility expansion really are what? My expectations are from here to here, from the support to the level of resistance. That's my expectation. My expectation on the bull flag is what? My expectation on the bull flag is, well, I'm going way up here. we're breaking out. I'm going way up here. So it really, it encourages me when most people will trade the bull flag, you get hammered. They'll enter here and they'll own it at the top. Everybody does that, right? You know this. And what does the expansion encourage me to do? Well, I don't know. I'm ready for a bust. On the first spill over and out, I'm ready for a bust. Yeah? It's a completely different experience when you're expecting a bust on the first breakout of a volatility expansion. Ye who have traded so much with a specific cuppage and handle feature. So the 1 second was kind of easy. Granted, of course, we were going quote unquote up. Now, where are we at on our daily 20 moving average? Where did we go up to? We didn't go up to anything thus far. We are so micro composed in on this lower time frame. Yes, we went up. What was the percentage gain? You're going to get into this. Can you trade it? Well, it went up 0.17. Yes, in fact, you can trade that. Bravo. Now, if you've traded 100 rounds and you're ready to start throwing and rolling into this level, you can say, fine, I'm going to be on the daily 20 moving average. I'm going to hit that 120 mile an hour fastball. Bring it. This is kind of like, this is just a little bit increased level of danger, right? I'm just going to say that in terms of becoming proficient at these lower time frames. If you put the volume in, and I say build a profile. If you build a profile, right, in terms of your participation in the market consistently at these lower time frames, you can get to where you become more of the more masterful in terms of how the flag work out. Not good, right? How's this 1 second time frame? Did you have enough to trade between here and here? Yeah, you had 0.17. Did we go up? You betcha we did. How'd the flag treat you on the fun run and gun 1 second time frame? Well, we have a little bit to and those of you who've traded, you know this, right? You know how these work, right? Without a doubt. So just good volatility. Some of you are proficient at this. We just hammered back down to that lower level of support. Nice pickup. Does this trade? Let's see. Does this trade? Now, meanwhile, we're hunting and running and gunning at a 0.1%, at a 0.15, at a point. Okay, that's fine. Let's look at what we did on the daily. We were just to kind of relax, kick our feet back just a little bit, and take away some of the noise. It's an opportunity for you to guess in the wrong direction. True? You better believe it. It can throw you a visual. And guys, it was just as much as me saying I don't like a flag on this lower time frame. It's a micro pattern time frame. Okay. You can be thrown a visual in 2 seconds that you either agree with or you disagree with, right? So when I'm looking at something, is it relevant? Sure, it's relevant. Is the cuppage and handle relevant? Sure, it's relevant. Do we have an expanding feature here? Is it relevant? Sure, it's relevant. Can we bust it? Yeah, we can bust it. What's my number one pattern to consider? Volatility. Can you see consistent? Probabilities even on the micro time frames? I will just caution you of one thing. I'll caution you of one thing. There's less oversight on the smaller time frames. We agree, less oversight on the smaller time frames. This chart's not getting passed around, I would imagine. The executive board of directors over at Morgan Stanley, it's just not. Is it? I'll ask them here local. It's not, okay? It's just not. Now, would this chart be discussed or considered at the executive level, management level of Morgan Stanley? Yes. The daily? Yeah, without a doubt. Confirmed, period. Personally confirmed, okay? So that means that there's some level of institutional eyes on this daily chart. There's some degree of expectation of technical conformance, right? This is the Wild West. You can learn to, guys, you can practice and shoot the bottle caps off the fence post, right? Yes. You can. You can get good at it, right? You just better be able to train in the Wild West and be able to own this stuff. It's not by nature, what we say, it's just not, it doesn't have to be as accommodating to you specifically because no one else is looking at it. It's got extra noise built into the equation. Right? So what we're seeing here is a broadening and a broadening. We just saw it on the 1 second time frame. Is it relevant that we would want to say, okay, on the 1 second, now we want to bring it into the 5 second? Because now that's what we're looking at on the 5 second. So we have a broadening formation to the upside that we need to conquer and a broadening formation here on the macro feature that we want to conquer. Let's go back into the 3 minute and just relax for 1 second, see what we're looking at. Okay, so on the 3 minute, we're looking at a flag. On the 3 minute, which I'm still going to call micro, what just happened on the flag on the 1 second? Yikes. Boom. Back to the level of support. True. So just guard yourself to lower the time frame. Just guard yourself. Okay? Just guard yourself in terms of that level of predictability. If you can master it and you've mastered it and you've got that level of a profile on the lower time frames, hey, you could be talking to me all morning long. Perfect. No problem. Beautiful. Perfect. 5 minutes. Let's see where we got. Cap line incoming. This is a good little exercise here. Going through those micro time frames, right? Looking at a level of engagement here. Now the quarter becomes a little bit more important. The quarter on the 4 hourly on $250 becomes more important. What is this off on threshold? That's off like 8 cents. 0.03, huh? We're getting into just the micro features here. Yeah. It's tight, guys. It's tight action. So when we're into those tight action moments, and I'm going to have to go and I'm going to let us roll now so we can come back and fight the fight at the close, right? Let's do that. I'm going to go do my morning routine, and if I can, go bug the guys. They don't work out in the mornings. I see them at night in terms of the executive guys at the Morgan Stanley. Yeah, they don't like the bull flag. I talked to these guys. They don't like the bull flag. They decide not to do the bull flag. They missed the bull flag. VIP caught the bull flag. Boom. Nice. High liquidity move. We love it. So let's just reinforce this morning. What was it? Nice hits on some tactical levels of engagement, high levels of expectation on these macro moves. Momentum. See, on this 3 minute, looks like we're fading on this 3 minutes. So we've got a divergence on the 3 minute, divergence on the 5 minute. Noting such. Let's look at this pattern again on the specific 5 minute, just to note such. Not an ideal climb up through this preceding turf. What we have to our advantage is the following on Tesla. And we'll just call this to our advantage with some trade-offs in terms of the specifics. What we have to our advantage is going to be, let me see where we're at on Tesla, 2 seconds. Where are we at? Let me go to the lines. I'll just go on the 3 minute. There we go. We got some power now. What we have to our advantage, and it'll work out in this fashion, to the extent that we have the expanding volatility, right, on a recognizable larger time frame. Okay, pay attention to this. When we see the crawl of price up and through inexplicably, it can take a while. It can drift down below. But when we see this, we can see it in one of two circumstances. One, double bottom single pass through on a blackjack. Two, we can see it, which we frequently see it on our expanding volatility equations. You agree? Yeah. So that crawl up through just inexplicable that we'll often see defying momentum, defying your indicators, defying the patterns. Mark it, tag it, print it, record it, and replay it, period. When you see price crawling up inexplicably, defying, and this is decent patterning. I'm ragging on the lower time frames for what it's worth. Overall, they can cost you money, but overall, what can print cash that we've seen in terms of probabilities that we've studied, would be the specific propensity for price to crawl back up and over through to where this level of resistance across the top. Bam. That's our primary market move, isn't it? Isn't that our primary market move? Let's measure from the point of entry along that 4 hourly. Blackjack powering up. We were off by 0.25 cents below. Now you're at 3.31%. Nicely done. Nicely done. I don't like this. Messy on the 5 minute. Again, when we're in said predicament of having an expansion and crawling back up through, blackjack or otherwise, just be prepared to look at it, not like it, and still see price go up to the upside. We agree? Couple of engagements along the specific daily, okay? 2 flash trades. You can count those. 2 flash trades on the daily. Mark it, guys. Tag it or enforce this. 2 on the daily. 2 precedingly that we were looking at on that 4 hourly top pro line. Those are highly relevant. Okay, those opportunities are highly relevant in the day. They're clocked, they're logged as trades. Let's work on the equation in terms of what's being deployed in that direction, how quickly, how they're being composed, and what that level of risk is in terms of capitalizing on that trade op, right? Trade opportunity. That's, you call it an op because every op is an opportunity, right? It is shorthand. It's shorthand. Now, we have a bit of a move straight up to level of resistance on NVDA. Yes. Still kind of parked, same level. Looks exciting, and then we're at the same level. So we've got some momentum issues to get to the upside. Did we hit our target on the lower time frame? Just say we did it, guys. Did we hit our target? I believe we hit our target. Congratulations. Another reason you might see price just deciding to, if you can give price the benefit of the doubt rather than pattern differentiations, complications, etc., I note it's difficult not to revisit a specific broadening top level of resistance. It just is generally. We agree? We agree. This must be Tesla. Broadening formation, boom. Broadening formation, boom. Okay. You'll see this rising wedge feature here, bam, back to target. You'll see this specific one here, boom. There we go. We hit target? Yes. We like that quite a bit. Do you have a target to the upside? Do you have a target to the downside? We consider such. We're about to hit into a near 100% on this. Now see, I'm about to get into some targets on real lower time frames. We're at that 86, about 90% of the way there. We're about to encounter again this level of resistance. Just pay attention to that 259.90. Maybe a reason to kind of slow the roll just a bit in terms of at least momentum. As Tesla's trying to go green, that's nice. Hey, nice to see the bulls pull it out, huh? Yes, nicely done. If you're working on those flash trades, again, I'm excited about the fact, and this is the grinding along that daily 20 moving average. Nothing wrong with that, guys. Did you make some money on the way up? Yeah, awesome. Did you make some money on the way up? Yes. And a difficult pattern. We agree a broadening. If you trade these enough, you know. These volatility blocks will catch your attention, won't they? Little bit, huh? A little bit. Based upon the move to the upside, what they're doing is they're drawing your attention to a potential breakout. Boom, up and over. That level of resistance based upon volatility. So I'll work on further designing, etc. I am going to let everybody go so you can go work on your trading. Nice trade day, nice open, nice job on Friday. In terms of the details, never exposed at higher price. You guys know, London, former hedge fund owner, private, non-SEC, not financial advice. Way to rock and roll it. We like to see the price action. Real quick check in on Bitcoin here that has engaged on the none other than that 200 weekly. Bullish over, bearish under. Mind it. Mind it. It is the key level in play, guys. Such a pleasure to be with you today and see these levels engage. We're going to refine this process, and I just already congratulate you for your level of success in deciding to master it. We're going to get there. It's going to be exciting. Way to trade. This is London with Bitcoin Spike and VIP Trader. We'll talk to you soon. Take care. Bye-bye.